the year 2026-2027.
A defining moment for India's economic journey. In 2025, India became the world's fourth largest economy. Now, the nation advances towards a $10 trillion economy. At this inflection point, fiscal policy and capital markets will shape what comes next. The Union Budget 2026 arrived amid global uncertainty and domestic ambition. More than an announcement, it sets real market consequences in motion.
ये बजट वर्तमान के सपनों को साकार करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है।
This is where perspective meets power. etnow.in India Investment Summit 2026, bringing together decision makers shaping India's economic future. Under the theme, India's Fiscal Playbook, Budget and Market Outlook 2026, with a sharp focus.
Sumit, stand by, 30 seconds. Shivani, stand by.
NBFCs, capital markets, mutual funds, trading, Fintech, crypto,
I will give the
and
cue,
investments.
then you come
This
inside.
is not just a post-union budget discussion. This is India's Fiscal Playbook in action. etnow.in India Investment Summit 2026.
Last 10
Nation
seconds.
First,
Wait.
Growth next.
Start walking inside. Start walking.
Good evening, ladies and gentlemen, and a very warm welcome to etnow.in India Investment Summit 2026, presented by SBI, co-powered by Adani Ambuja Cement and HDFC Life, associate partner Latin Manharlal, crypto partner CoinDCX, housing finance partner LIC HFL, timekeeping partner Just in Time, healthcare partner Zota Healthcare Limited.
Absolutely, Sumit. We meet at a time when the global economy is navigating uncertainty, volatile markets, shifting supply chains, and evolving geopolitical equations. And yet, amid this turbulence, India's story stands out. Its clarity of direction and confidence of purpose. The Union Budget 2026-27, in fact, Sumit, reflects all of this. Exactly this that we are talking about. It focuses on fortifying the Indian economy against global volatility through strategic investments in technology, healthcare, infrastructure, and grassroots entrepreneurship. The emphasis is not just on growth, but on resilient growth that is inclusive, sustainable, and future ready. Sumit, after months of tariff threats, in fact, we've seen this
Exactly.
change.
You know, it's been months of these tariff threats. Yes, no, what's happening, public deadlines, sustained pressure from the United States. But finally, India sealed a crucial trade deal, not by yielding early, but by waiting out the noise. Now, the message to Washington, D.C. was subtle yet unmistakable. India was negotiating, not pleading. It was a moment that underscored India's growing economic maturity and negotiating strength on the global stage. And you know, Shibani, the numbers, they back this up, because if you see the first 6 months of FY 25-26, FDI inflows stood at around $50.36 billion, signaling sustained momentum and rising investor confidence. And in fact, the global capital, it continues to view India as a long-term stable and scalable opportunity.
Absolutely, Sumit. So with today's summit, we understand where India is headed, what opportunities lie ahead, and how businesses and investors align with this next phase of growth. So over the course of today's discussion, expect bold ideas, sharp insights, and honest conversations, because the India growth story is in fact no longer about potential alone. It's about performance, it's about partnership, it's about purpose. So please feel free to share your thoughts, your photos and suggestions on social media using these hashtags India Investment Summit and IIS 2026.
Now, before we call on our chief guest, a few lines about him. He is someone who who you've seen so often, and he's been a key supporter of industry and growth in India. Before I invite him up on stage, I'd like to invite Mihir Bhatt, Managing Editor and Chief Business Officer, Times Influence, to welcome the Honorable Minister, our chief guest. Mihir, can we have you on stage? And ladies and gentlemen, huge round of applause to welcome Shri Mangal Prabhat Lodha, Minister of Skill, Employment, Entrepreneurship and Innovation with the Government of Maharashtra. Mihir, if you could welcome sir with a token of our appreciation. Round of applause, ladies and gentlemen. Thank you. Thank you for that, Mihir. Lodha sir, if we can request you to please take a seat. I'd like to invite up on stage Sajit Mangat, the Senior Executive Editor at ET Now and ET Now Swadesh, for a fireside chat with the Honorable Minister.
Thank you, Mr. Lodha, for joining us today in etnow.in India Investment Summit. सर, हम बजट की सीज़न के बाद में आ रहे हैं और सबसे बड़ा जो थीम रहा है बजट का वो है कैपिटल एक्सपेंडिचर, इन्वेस्टमेंट इंडिया में कैसे करें, और इंडिया की बात करें तो महाराष्ट्र में कैसे इन्वेस्टमेंट को अट्रैक्ट करें। अभी हमने देखा कि कुछ ही हफ्तों पहले दावोस में चीफ मिनिस्टर देवेंद्र फडणवीस ने डेटा सेंटर्स के ऊपर बहुत बड़ा डील किया, जिसमें अदानी और लोधा ग्रुप के साथ उन्होंने किया था। पहला सवाल ये है कि महाराष्ट्र में अब इन्वेस्टमेंट को पुश करने के लिए क्या देख रहे हैं?
महाराष्ट्र में इन्वेस्टमेंट को पुश करने के लिए सबसे अच्छा काम तो महाराष्ट्र के लोगों ने किया कि माननीय देवेंद्र फडणवीस जी को महाराष्ट्र का मुख्यमंत्री बना दिया। उनसे अच्छा फ्यूचरिस्टिक और एडमिनिस्ट्रेटिव कैपेसिटी वाला मुख्यमंत्री सारे देश में किसी को नहीं मिला जो कि महाराष्ट्र को मिला है। कारण ऐसा है कि ये समय टेक्नोलॉजी का है एंड इज ए टेक समय, और आप देख रहे हैं कि उन्होंने आने के बाद में महाराष्ट्र में ऑल आउट हर तरीके से, केवल स्पीचेज नहीं है, केवल मीटिंग्स नहीं है, रिजल्ट्स भी हैं। और ये इनकी जो प्लानिंग और वर्किंग चल रही है उसका सही रिजल्ट जब आप अगले साल ये सबमिट कर रहे होंगे 2027 में, तब आपको ये समझना पड़ेगा कि देवेंद्र जी क्या हैं और किस तरीके से वो काम कर रहे हैं। महाराष्ट्र के अंदर इंडस्ट्रीज़ के लिए बहुत रेड कारपेट केवल ज़मीनें देकर या सब्सिडी देकर नहीं है, बल्कि जो कि बहुत साल पहले माननीय प्रधानमंत्री नरेंद्र भाई मोदी जी ने जिस तरह से गुजरात को बदला, गुजरात में पहले बहुत ज़्यादा इंडस्ट्रियलाइजेशन या इकोनॉमाइजेशन नहीं था, उन्होंने उसको हर इंडस्ट्रियलिस्ट को अपने दरवाजे खोल दिए, हर बिजनेसमैन की प्रॉब्लम को खुद की प्रॉब्लम समझा, और वही आज माननीय मुख्यमंत्री देवेंद्र फडणवीस साहब कर रहे हैं कि किसी भी इंडस्ट्रियलिस्ट को, किसी भी बिजनेसमैन को महाराष्ट्र के अंदर कोई भी प्रॉब्लम होती है तो ही कैन अप्रोच हिम एंड ही इज देयर टू सॉल्व इट। नॉट ओनली दैट, उन्होंने इसके अलावा पार्टी की मीटिंग्स के अंदर, विधानसभा के सेशन के अंदर उन्होंने बहुत स्पेसिफिकली कहा है कि बिजनेसमैन को, इंडस्ट्रियलिस्ट को, इनको वेलकम करना महाराष्ट्र के हित में है, और उसको कोई भी रोकने की यदि कोशिश करेगा तो मेरी सरकार उसको ऑब्स्ट्रक्शन नहीं बनने देगी। वी वांट टू बी द फैसिलिटेटर, नॉट द ऑब्स्ट्रक्टर।
सर, हम महाराष्ट्र से जरा मुंबई में आ जाते हैं। हमारी मुंबई में इन्वेस्टमेंट काफ़ी चल रहे हैं। अगर हम देखें तो इंफ्रास्ट्रक्चर इन्वेस्टमेंट्स काफ़ी चल रहे हैं। मुंबई को हम और कैसे बहुत तेज़ी से एक्सपैंड हो रहा है, तो किस तरह से हम वहाँ पर स्मार्ट इंफ्रास्ट्रक्चर की तरफ जा सकते हैं, और विद इन मुंबई में अगर हम देखें तो स्किल सेट भी हैं, तो आप स्किल्स के मिनिस्टर हैं, तो आप कैसे यहाँ पर एक्सपेंशन कर रहे हैं?
नहीं, अभी मीटिंग के पहले जब मैं मीर भट्ट जी के साथ बैठा था आपके साथ में, तभी जो उन्होंने कहा मेरे को बात बहुत अपील कर गई, और मैं इसको सीएम साहब को भी कम्युनिकेट करूंगा। जो उन्होंने कहा कि मुंबई को यदि, आपने जो मुंबई का सवाल किया, तो मुंबई को यदि वास्तव में आगे बढ़ाना है, मुंबई के अंदर लोगों को और अच्छी फैसिलिटीज़ देनी है, तो मुंबई के अंदर जो ये मल्टीपल ऑनरशिप हो गई है, महाडा अलग काम करती है, एमसीजीएम अलग काम करती है, एमएमआरडी अलग काम करती है, एसआरए अलग काम करता है, ये सब हटाकर एक सीईओ होना चाहिए। और मुझे लगता है कि भारत में यदि कहीं एक्सपेरिमेंट इसको करके सक्सेस के रूप में आगे बढ़ाना है तो मुंबई इज़ द राइट प्लेस फॉर इट। और मुंबई के इधर इंफ्रास्ट्रक्चर आगे बढ़ाना है तो मुंबई के अंदर सबसे बड़ी प्रॉब्लम यदि कोई अभी भी सॉल्व नहीं हुई है तो वो इंटर डिपार्टमेंट कोऑर्डिनेशन की है, और वो माननीय देवेंद्र जी बहुत अच्छे तरीके से कर रहे हैं। लकीली उनको माननीय नरेंद्र भाई मोदी जी का बहुत अच्छा सहकार और गाइडेंस दोनों ही मिलता रहता है, और इसके लिए ये मुंबई आने वाले समय के अंदर इंफ्रास्ट्रक्चर के अंदर नंबर 1 सिटी बन जाएगा। आज भी लोग जब आते हैं मुंबई के अंदर तो जो नई हमारी मेट्रो बनी है, अश्विनी भिड़े जी को क्रेडिट देना चाहिए उसका, नए हमारे जो कोस्टल रोड बनी है और जो बन रही है वो लोग देखते हुए रह जाते हैं, फिर बाद में उनको ख्याल आता है कि अरे हम तो उसी पुरानी मुंबई के अंदर आ गए, पर पुरानी मुंबई नहीं बन गई है, इंफ्रास्ट्रक्चर बहुत आगे बढ़ेगा। और जहाँ तक स्किल का आपने सवाल किया तो स्किल के बिना तो कुछ भी नहीं हो सकता, नॉट बिकॉज इट्स माई डिपार्टमेंट बट आई एम टेलिंग यू वेरी ऑनेस्टली, अभी वो समय चला गया कि आप किसी को कुछ भी काम दे दो। अभी तो बहुत ही डिटेल में स्पेसिफिकली उस काम का मास्टर ही उस काम को पा सकता है, और बहुत अच्छे रिजल्ट लाने हैं तो उसमें अप स्किलिंग के बिना कोई तरीका नहीं है। और महाराष्ट्र के अंदर वर्कफोर्स बहुत है, महाराष्ट्र में युवा बहुत मेहनती है, काम पढ़ा लिखा है, पर उसको काम के लिए जॉब मिले या सेल्फ एम्प्लॉयमेंट मिले, इसके लिए स्किलिंग का बहुत बड़ा रोल है। तो उसके लिए इस बार हमने 5 नई स्कीम्स लाई है, होपफुली अगले 1 साल के अंदर उसका रिजल्ट दिखने लग जाएगा।
सर हाँ, जिस तरह से टेक्नोलॉजी चेंज कर रहा है, नई टेक्नोलॉजी आ रही हैं, हम एआई की बात कर रहे हैं, मशीन लर्निंग की बात कर रहे हैं, और स्किल सेट की बात करें तो हमको जो फ्यूचर वर्कफोर्स प्रिपेयर करना है वो उस लाइन पे करना है ताकि अगले 5, 10, 15 सालों में महाराष्ट्र में और भारत का भी एडवांसमेंट हो। उसके लिए महाराष्ट्र का एक बहुत बड़ा रोल है, क्योंकि महाराष्ट्र से सबसे ज़्यादा बिजनेसेस आते हैं और एक्सपेंशन भी महाराष्ट्र में ही होते हैं। तो स्किल सेट के लिए आप क्या कर रहे हैं, स्पेशली एडवांस कोर्सेज के लिए क्या कर रहे हैं?
लास्ट में क्या कहा आपने?
एडवांस कोर्सेज जो हैं।
हाँ, तो मैं इसके बैकग्राउंड में 2 चीज़ें मेरे ऑब्जर्वेशन बताना चाहता हूँ। एक, कई लोगों को पता है माननीय प्रधानमंत्री नरेंद्र भाई मोदी जी ने जब 2014 के अंदर प्रधानमंत्री पद की शपथ ली थी तो आपकी तरह किसी पत्रकार ने उसको पूछा था कि अब आप प्रधानमंत्री तो बन गए, यदि आप प्रधानमंत्री नहीं बनते और आपको किसी मंत्री पद की शपथ लेनी पड़ती तो आप कौन सा डिपार्टमेंट लेना पसंद करते? उन्होंने 1 सेकंड में जवाब दिया था, स्किल डिपार्टमेंट। ये 2000 इससे डिपार्टमेंट ऑफ हिज हार्ट। सेकेंडली, अभी 8 महीने पहले देश के इंडस्ट्री सेक्रेटरी सेंट्रल गवर्नमेंट के यहाँ पर आए थे महाराष्ट्र के अंदर। देवेंद्र जी ने हम सब लोगों को, सब डिपार्टमेंट के लोगों को और काफ़ी लोगों को बुला के उनसे इसके बारे में अलग अलग चर्चाएं, 3 दिन का अलग अलग लोग आए थे। तो उस समय उन्होंने एक अच्छी बात कही कि अब जो हमारे पास फॉरेन के इन्वेस्टर्स आते हैं या इंडिया के बड़े इन्वेस्टर्स हमसे कंसल्ट करने को आते हैं, वो हमसे ये नहीं पूछते हैं कि यहाँ पर ज़मीन कहाँ सस्ती मिलेगी या सब्सिडी कहाँ ज़्यादा मिल रही है। वो समय अब गया। अब उनके 2 ही सवाल होते हैं, उस किस जगह पर लॉ एंड ऑर्डर सिचुएशन पूरी कंट्रोल में है और कहाँ पे स्किल वर्कफोर्स मिलेगा। तो ये 2 चीज़ें स्किल के बारे में इसका इंपॉर्टेंस ठहराती हैं। यही समझते हुए माननीय देवेंद्र फडणवीस साहब ने इस बार महाराष्ट्र के अंदर सारे जो हमारे 412 ITI हैं उनको पूरे को रिनोवेट करने को लिया है, अपग्रेड करने को लिया है, न्यू एज कोर्सेज शुरू किए हैं, पुरानी मशीनरी हटा के नई मशीनरी ला रहे हैं। और केवल मशीनरी और भवन बनाने से कुछ नहीं होता, इस फैक्ट को समझते हुए अच्छे टीचर, अच्छे एक्सपर्ट लाना। और यही नहीं, हम सब इंडस्ट्रियल हाउसेस को और इंडस्ट्रियल ऑर्गेनाइजेशन को रिक्वेस्ट कर रहे हैं कि आप ITI एडॉप्ट कर लीजिए, क्योंकि हम सब कुछ करने के बाद भी उनके जैसा दिमाग हमारे पास में नहीं है। ये मानते हुए हम उनको ITI एडॉप्ट करने के लिए, उसमें भी ये कह रहे हैं कि 70% खर्चा महाराष्ट्र सरकार देगी, आप खाली चल के लेटेस्ट कोर्सेज उनको सिखाइए। हम पूरी कोशिश कर रहे हैं कि नया बढ़ता हुआ भारत, विकसित भारत, आगे बढ़ता हुआ भारत, टेक्निकल युक्त भारत, इसमें महाराष्ट्र के बच्चे कहीं पीछे नहीं रहने चाहिए।
सर अगर हम देखें तो हमारे यहाँ पर स्टेट्स के बीच में बहुत कंपटीशन बढ़ गया है। एक ज़माने में आंध्रा और तेलंगाना में स्किल सेट नहीं थे, पर वहाँ के CMs ने और पॉलिटिकल लीडरशिप ने काफ़ी काम किया उधर, जिसकी वजह से आज हम देख सकते हैं कि IT हब बन रहे हैं वहाँ पर। आपको लगता है कि हम अगले 15 साल में एट पार हो जाएंगे जिस तरह से हम इन्वेस्टमेंट कर रहे हैं स्किल्स में, कॉलेजेस में, एजुकेशनल इंस्टीट्यूशंस में?
नहीं, मैं आपकी इस बात को तो मानता हूं, और चंद्रबाबू नायडू को हमको अप्रिशिएट करना चाहिए कि उन्होंने आंध्र प्रदेश, जो कि एक बिछड़ा हुआ स्टेट था उस समय, उसको भारत ने दुनिया के नक्शे पे लाकर खड़ा कर दिया। और लीडरशिप का मतलब यही होता है कि आप पूरे बहुत बड़े पहाड़ के अंदर से आप सुई ढूंढ लो, आपके काम की चीज़ ढूंढ लो। तो अभी वही सरकार और वही स्टेट आगे बढ़ पाएगा जो कि फ्यूचर को समझ पाएगा। 15 साल पहले माननीय नरेंद्र भाई मोदी जी ने हमारे को एक मीटिंग में समझाया था कि अब आने वाले समय में सब कुछ सोशल मीडिया पे चलेगा, इसलिए सोशल मीडिया सीखना शुरू करो। उस समय सोशल मीडिया ज़्यादा पॉपुलर नहीं था। आज माननीय देवेंद्र फडणवीस साहब हमको यही कह रहे हैं कि 10 साल के बाद में भारत सब कुछ, महाराष्ट्र भारत टेक पे चलेगा, लेटेस्ट टेक्नोलॉजी पे चलेगा। यदि आप टेक्नोलॉजी पे नहीं चल के पुरानी सिस्टम पे चलते रह गए तो आप वहीं रह जाओगे जैसा कि अफगानिस्तान दुनिया से पीछे रह गया और अमेरिका और चाइना बहुत आगे बढ़ गए। तो भारत को यदि आगे बढ़ना है, महाराष्ट्र को नंबर 1 स्टेट बनना है, मुंबई को आगे ले जाना है, मुंबई को हैदराबाद से भी ज़्यादा, बेंगलोर से भी ज़्यादा इन्वेस्टमेंट एट्रैक्टिव बनाना है, तो हमको अप स्किलिंग करके टेक सेवाएं स्टूडेंट्स का बड़ा फोर्स तैयार करना पड़ेगा। और जो कि माननीय देवेंद्र फडणवीस के नेतृत्व में महाराष्ट्र सरकार ने काम शुरू किया है।
हमने देखा कि सरकार भी पुश कर रही है कि इंडस्ट्री अप्रेंटिसशिप प्रोग्राम्स को अडॉप्ट करे। महाराष्ट्र में सरकार क्या कर रही है जिससे हम यूथ को एम्प्लॉयबल कर सकें, उनको ट्रेन कर सकें, ऑन द जॉब ट्रेनिंग जिसको कहते हैं, उनको वो कर सकें?
आपका सवाल सही है। ये इंडस्ट्रीज़ का ही ताकत है कि वो बच्चों को बिल्कुल प्रैक्टिकल ज्ञान दे सकते हैं। उनके पास में फैक्ट्रीज़ भी हैं, उनके पास में सिखाने वाले लोग भी हैं। पर दुर्भाग्य ये है कि अभी भी सभी इंडस्ट्रीज वाले सरकार पे भरोसा नहीं करते हैं, सरकार से थोड़ा दूर दूर रह के काम करना चाहते हैं। ये हमारे मोदी साहब कहा करते हैं कि लास्ट 50-60 साल के अंदर जो हमने लोगों को रेस्पेक्ट नहीं दिया, जो हम कहते हैं वो करते नहीं हैं, और इसके लिए लोगों का फेथ हमने लूज़ कर दिया। तो अभी वो कहते यही है कि आप जो कहो वो करो, उतना ही कहो। इंडस्ट्रीज एसोसिएशन की हालत तो ये है कि वो सरकार के साथ काम करना, उनके साथ जुड़ना तो आपने जो बताया वो बहुत ज़रूरी है। फिर भी यदि सारे इंडस्ट्रियलिस्ट को या यहाँ बैठे हुए लोगों को भी ये लाइट बंद कर दी जाए और उनसे पूछा जाए कि आप सरकार से क्या चाहते हैं, महाराष्ट्र सरकार से या केंद्र सरकार से, तो 90% लोग यही जवाब देंगे कि हमको ये चाहिए कि हमारे लिए कुछ मत करो, हमको हमारे हाल पे छोड़ दो, हम अपना आप सब कुछ कर लेंगे। ये यदि लोगों को सपोर्ट, यदि फ्री अपने इन सब के अंदर दिमाग भी है, सबके अंदर विलिंगनेस भी है और सबके अंदर बहुत बड़ी ताकत भी है, पर सरकारी सिस्टम हम करने को जाते हैं अच्छा और हो जाता है उल्टा। हम जो कुछ नए कानून बनाने को जाते हैं वो इनके लिए फैसिलिटेटर कम हो जाते हैं और अड़चने ज़्यादा पैदा कर लेते हैं। इसीलिए माननीय नरेंद्र भाई मोदी ने लास्ट 14 साल के अंदर 3000 से ज़्यादा पुराने कानून रद्द किए। माननीय देवेंद्र फडणवीस जी ने 2000 पुराने जीआर रद्द किए। पर ये इतना बड़ी कहानी है कि अभी और इसको 5 साल ठीक लगेगा इन सब को अपनी अपनी मर्जी से काम करने देने के लिए। जिस समय इनको ये समझ में आ जाएगा कि हमको हमारे अंदर कोई अड़चने पैदा नहीं करेगा, जरूरत पड़ेगी तो फैसिलिटेटर रहेगा, उस समय ये सारे इंडस्ट्रियलिस्ट और सारे बैंकर्स जो स्पीड से काम कर रहे हैं उससे 4 गुनी स्पीड से काम करेंगे।
सर, आपने सही कहा कि इंडस्ट्री चाहती है कि हमको रेगुलेट ना किया जाए, हमको अपना पाथ खुद चुनने का वो मौका मिलना चाहिए। बट सरकार का काम है कि डायरेक्शन दिखाना, और प्राइम मिनिस्टर भी टेक सेवी हैं और उन्होंने भी बताया कि किस डायरेक्शन में जाना, विकसित भारत के लिए हमें क्या करना पड़ेगा। और देवेंद्र भाई जो हैं उन्होंने भी कहा कि महाराष्ट्र को किस लेवल किस डायरेक्शन में जाना है। अगर हम गवर्नमेंट पॉलिसीज़ को देखें, गवर्नमेंट पॉलिसीज़ क्या कर रही हैं आज के डेट में ताकि इंडस्ट्रीज़ को एक डायरेक्शन मिल जाए पर इंटरफेरेंस ना मिले?
सरकार को ये समझना पड़ेगा कि बहुत पुरानी एक छोटा सा कहावत है भारत के अंदर, फेमस थी कि जिसका राजा व्यापारी उसका प्रजा भिखारी। तो हमको सरकार को कुछ भी व्यापार करने का या व्यापार के अंदर हम सबसे अच्छा सोचते हैं ये बात करने का अधिकार ही नहीं है। ये सब हमसे ज़्यादा इंटेलिजेंट है और अपने अपने फील्ड के अंदर एक्सपर्ट हैं। तो पहला काम तो सरकार को ये करना चाहिए कि जितना हमने इंडस्ट्रीज एसोसिएशन और इंडस्ट्रीज डेलीगेशंस हैं वो जो कुछ भी सजेशन देते हैं, जो कुछ भी बात करते हैं, उसको सीरियसली इम्प्लीमेंट करने के लिए हमारा मन बनाना चाहिए। नहीं तो हम लोग जो सरकार में बैठे हैं, मंत्री बने हुए हैं, हमको तो ये लगता है कि हमसे ज़्यादा तो कोई समझता ही नहीं है। ये कुछ भी बात लेके आएंगे पर हमको लगता है कि हमारा ज्ञान तो इनसे बहुत ज़्यादा बड़ा है। तो सबसे पहले तो हमको धरती पे आना पड़ेगा कि हमको समझना पड़ेगा कि एवरीवन इज़ ए एक्सपर्ट एंड द लीडर इन देयर ओन फील्ड। और सेकंड बात ये है कि सरकार को यदि आने वाले समय के अंदर लोगों के फ्रेंडली पॉलिसी, जहाँ तक आपने कहा लाने की बात है, तो फ्रेंडली पॉलिसी लाने के लिए सरकार को वास्तव के अंदर इनके हाथ में अधिकार देने पड़ेंगे। आप यदि इंडस्ट्रीज़ के टॉप लोगों को, बिजनेस के टॉप लोगों को, टॉप बैंकर्स को केवल कंसल्टेशन के लिए बुला बुला के छोड़ दोगे और निर्णय तो लास्ट में आपको जो करना है वही करोगे, तो स्थिति ऐसे ही चलती रहेगी। अब ये समय आ गया है कि हमको ये रियलाइज़ कर देना चाहिए कि ये जो कहते हैं, ये जो बता रहे हैं, ये हमसे ज़्यादा थॉट ओवर है, हमसे ज़्यादा इनको एक्सपीरियंस है, और इसलिए सरकार को केवल डिस्कशन की बातों को टेबल पर न रखते हुए इसको कानून के अंदर लिखना शुरू कर देना चाहिए, तो हम सब लोग मिलकर अच्छा काम कर पाएंगे।
सर, हम थोड़ी देर पहले बात कर रहे थे कि हमारे आज के यूथ क्या जॉब करना पसंद करेंगे या एंटरप्रेन्योर बनना पसंद करेंगे? आपको क्या लगता है कि आज का यूथ क्या करना चाहता है? वो जॉब करना चाहता है या एंटरप्रेन्योर बनना चाहता है?
आज के यूथ को तो दो ही सामने नज़र आते हैं, या तो अंबानी बनना है, नहीं तो अदानी बनना है। इसके अलावा लोगों को और कुछ भी नहीं बनना है। बीच का कोई उनको सेकंड स्टेज समझ में ही नहीं आती है। और हकीकत ये है कि ये सब करने के लिए उन लोगों ने जितनी मेहनत की, मैं जितना समझता हूँ, आज भी ये दोनों जो हमारे भारत के बिजनेस टाइकून्स हैं, जिनके कारण भारत इंडस्ट्री सेक्टर में पहचाना जाता है, वो शायद यहाँ बैठे हुए जितने लोग हैं, इंक्लूडिंग मैं भी उसमें शामिल हूँ, हमसे बहुत ज़्यादा खुद मेहनत करते हैं। और इसलिए बिना मेहनत के कुछ होता नहीं है। आज का जो यूथ है वो जब तक इस फैक्ट को नहीं समझ आएगा कि वो जो ऊपर पहुंचा है वो तो ठीक है, पर ऊपर पहुंचने के लिए उसको बहुत बड़ा पहाड़ चढ़ के, नुकीली पहाड़ियाँ क्रॉस करके वहाँ जाना पड़ा। एक और दो, पहाड़ का जो टॉप होता है वो बहुत छोटा होता है, और इसलिए वहाँ पे टिके रहना तो और भी मुश्किल होता है, क्योंकि सारी दुनिया में और भारत में तो खास करके बहुत सारे लोग लगे रहते हैं कि उसको नीचे कैसे गिराएं ताकि मैं ऊपर पहुँच सकूँ। तो ऐसी परिस्थिति के अंदर में यूथ जो भी आगे बढ़ना चाहता है, उसको यदि जॉब तो भी बहुत कम मिलने वाले हैं, जॉब सरकार में भी कम है, टेक्निकल के बाद में प्राइवेट में भी कम है, इसके लिए सेल्फ एम्प्लॉयमेंट या जो बड़ी इंडस्ट्रीज है उसका पार्ट बन के रहना, ये आज के डेट में सबसे अच्छा है। और धीमे धीमे आज के लोगों को ये समझ में आ रहा है, और लॉन्ग रन में वही हमारे लिए सक्सेस होगा।
लोरा जी, आप जैसे जितना रियल एस्टेट को जानते हैं और कोई जानता नहीं है, और रियल एस्टेट आज के ज़माने में बहुत ही वाइब्रेंट सेक्टर हो गया है ना। लेबर एम्प्लॉयमेंट भी देता है, इंफ्रास्ट्रक्चर भी बनाता है, और जीडीपी को भी कंट्रीब्यूट करता है। मैं पूछना चाहूँगा कि मुंबई का रियल एस्टेट मार्केट आज के डेट में आपको कैसे लगता है? क्या ओवरहीटेड दिखता है या अभी भी वाइब्रेंट है?
नहीं, वैसे रियल एस्टेट में मैं अभी हूँ नहीं, मेरा सन अभिषेक बिजनेस संभालता है। फिर भी आपने पूछा है तो मैं, चूँकि मेरी फैमिली में, इसलिए थोड़ा बहुत मुझे भी जानकारी रहती है। तो 89 में आने का मौका मिला है, तो बहुत ऑनेस्टी से बात करेंगे तो ही अगली बार बुलाएंगे। गोल गोल बात करेंगे तो वहाँ सामने बैठना पड़ेगा। तो मैं आपको मेरी ऑब्जर्वेशन बता देता हूँ, जो कि अभिषेक की ऑब्जर्वेशन से थोड़ी अलग है।
बिल्कुल।
मेरी ऑब्जर्वेशन ये है कि हम ओवर सप्लाई की तरफ जा रहे हैं, और दूसरा ये भी है कि भारत के अंदर एक अजीब सी मेंटेलिटी है कि कोई भी नया बिजनेस जब ठीक ठाक करने लग जाता है तो सब कोई आदमी उसके अंदर चले जाते हैं। कभी शेयर मार्केट हुआ तो हर एक आदमी ने अपने यहाँ पे शेयर का बिजनेस शुरू कर दिया। अभी बीच में यदि मान लीजिए डायमंड का शुरू हुआ तो हर आदमी ने डायमंड का बिजनेस शुरू कर दिया। रियल एस्टेट के अंदर भी आज यही हालत है कि हर बड़ा इंडस्ट्रियलिस्ट हाउस, हर बड़ा व्यक्ति रियल एस्टेट में आना चाहता है। और मैं जो पिछले 40 साल से रियल एस्टेट बिजनेस में देख रहा हूँ, यह शुरुआत होती है कि वापस सफाई की शुरुआत हो जाती है। और इसके लिए आने वाले समय के अंदर यदि बहुत ज़्यादा सरकार की तरफ से कुछ रेगुलेट नहीं किया गया तो ये रियल एस्टेट मार्केट के अंदर आने वाले समय में बहुत ज़्यादा मेहनत करनी पड़ेगी बिल्डर्स को। और लोगों के लिए जो अच्छा काम कर रहा है, टॉप ग्रेड के लोगों को कुछ फ़र्क नहीं पड़ेगा क्योंकि वो मटेरियल बहुत कम अवेलेबल है। पर वो जो बाकी जो इकट्ठी हो रही है, सब बहुत सारे फ्लाई बाय नाइट वाले रियल एस्टेट डेवलपर्स तैयार हो रहे हैं, वो जैसे पिछली बार परेशानी हुई थी वैसे परेशानी होने का चांस है।
सर आपको लगता है कि हम बबल की तरफ जा रहे हैं, एक रियल एस्टेट बबल की तरफ जा रहे हैं जहाँ पर प्राइसेस क्रैश हो सकते हैं आगे जाके?
नहीं, प्राइसेस तो क्रैश इसलिए नहीं हो पाएंगी क्योंकि ये बेसिक की प्राइसेज इतनी हो गई है लैंड की और कंस्ट्रक्शन की, पर सप्लाई के बारे में जरूर यदि सप्लाई इफ नॉट मैच विद द इंफ्रास्ट्रक्चर देन इट इज़ ए प्रॉब्लम।
सर वहाँ पर इंफ्रा की बात की तो वहाँ पर तो सरकार का आ जाती है, इंफ्रा तो सरकार को ही लाना पड़ता है।
इंफ्रा सरकार को लाना पड़ता है, बिल्कुल सच है। और आप देख रहे हैं कि अभी जो कुछ काम पिछले 5-7 साल में हुआ है, आप कभी कोई कल्पना कर सकता था क्या कि नागपुर से यहाँ पर समृद्धि मार्ग के अंदर आप 6 घंटे में पहुँच जाओगे? कोई कल्पना कर सकता है कि न्यू बॉम्बे के एयरपोर्ट नई जगह बन रहा है, सोचते थे लोग कैसे जाएंगे, अभी थोड़े दिनों के बाद में आप 40 मिनट में जाने लग जाओगे। 14 मिनट के अंदर आप बांद्रा से नरीमन पॉइंट के ऊपर पहुँच जाते हो। तो 22 मिनट के अंदर आप वो ग्रांट रोड स्टेशन से या चर्च गेट से आप एयरपोर्ट पे पहुंच जाते हो रश आवर्स के अंदर, क्योंकि ग्राउंड के 4 फ्लोर नीचे कोई रश चलता नहीं है। तो ये जो इंफ्रास्ट्रक्चर बहुत ही अच्छा हो रहा है। मुझे लगता है कि जहाँ हमारी सबकी कमियां हैं वो मैंने आपके सामने की है, पर मैं आप सब लोगों से रिक्वेस्ट करूंगा ईटी नाउ के माध्यम से कि जो हमारी सरकार ने अच्छा काम किया है, कभी ठीक लगे तो एक ईमेल देवेंद्र जी के नाम पे लिख देना कि वी अप्रिशिएट के बाकी कुछ हुआ कि नहीं हुआ, ये आपने अच्छा काम किया। हर एक को अच्छेपन के लिए सपोर्ट की ज़रूरत होती है, उससे ताकत बढ़ती है। और आपको आते जाते कहीं लगा होगा कि इंफ्रास्ट्रक्चर पहले से अच्छा हुआ है तो इतना ज़रूर करिएगा।
लोधा जी, ईटी नाउ में आए आप और हमसे बात किया और फ्रैंकली बात की आपने। धन्यवाद आज हमसे जुड़ने के लिए। थैंक यू।
Thank you so much, Shri Mangal Prabhat Lodha, for that insightful information. 3-4 चीज़ें आपने जो कही वो हमारे काफ़ी ध्यान में रहेंगी। सबसे पहली चीज़ तो मुंबई रीजन के लिए एक सीईओ होना चाहिए। उसके बाद जो आपने कहा कि युवाओं को ऊंचाई पर जो लोग हैं वो दिखते हैं, लेकिन उसके लिए जो पहाड़ चढ़ना पड़ता है वो नहीं दिखता। तो ऐसी कई सारी अच्छी चीज़ें जो आपने कही है वो काफ़ी ज़रूरी है, और टेक का इस्तेमाल for your progress, for the progress of the state of Maharashtra going forward as well. So moving on, Sumit, the Union Budget 2026 gives a boost to India's growth agenda based on sustained reforms, infrastructure development and ease of doing business, financial prudence and next generation technology trust.
Absolutely, Shibani. And to help us gain a deeper and more coherent understanding of India's strategy in this post-budget environment, I'd like to invite up on stage Mr. S. Naren. He's Executive Director and Chief Investment Officer at ICICI Prudential AMC. And I'd also like to invite up on stage Aisha Faridi, Executive Editor at ET Now and ET Now Swadesh for the fireside chat.
Touched upon Mumbai's infrastructure, what the future of Mumbai is going to look like, and how is it that you can make money in real estate. When we talk about money, when you talk about India's growth, how can you not touch upon what the stock markets are up to? And for that, no better than S. Naren himself joining in to talk about that. And Naren, when I just look back at how this week has been from Sunday onwards, I just remember Lenin's quote, right? That there are decades when nothing happens and there are weeks when decades happen. From Sunday to now, so much has happened. When you look back at the week, Naren, what's the first thought?
Volatility. And every day we have to think what's going to happen to the market the next day, and that too we are managing public money. So it's been a real roller coaster ride actually. But not big in the sense that we have seen even bigger roller coaster rides in the past. And at this point of time, you know that the macro is good. So we know what is the downside. So from that point of view, it's different from some earlier periods of time.
Right. But Naren, you know, you described 2025 as the year of hibernation. Is 2026, forget what happened in last week, is 2026 finally the year when we will come out of hibernation?
Yeah, actually, the government is trying. What happened is that, the proper trade agreement, I think, when signed and the duties come down to 18% with US, and We sign all that, then we have a situation where the government has tried to push investment into data centers. So whenever we met anyone, they keep talking about and AI, artificial intelligence, India is not part of the artificial intelligence story. So I think the government tried this time to actually give incentives to start data centers. So if you look at, historically, if you look at it, even in India didn't do anything in semiconductors, didn't do anything in making computers, but still we were part of the IT services boom. So what the government is thinking is, yes, we are not part of the artificial intelligence, NVIDIA kind of stories, but still we can be part of the AI services boom. So that is what the government is trying at this point of time, and that is the hope. So we are waiting for this hibernation to end, and the markets to actually, for the FIs to put money, because there's nothing wrong from the domestic side. As domestic mutual funds, we have been getting good inflows from all the investors, and we've been investing all the way in the last 3 years. So that's not been a challenge. It's only the FIs who have not found India not worth it, because we are not an AI story, despite the fantastic macro.
But Naren, given the SaaSpocalypse, and trust me, it took me long to practice that word, which is currently playing out in the markets, do you think India can pivot? Should all that capex which is going into AI globally and especially in the western part of the world, should that fail? Should the market get restless? Should the NASDAQ take a steeper fall as we are in this DeepSeek 2.0 kind of movement? And can India pivot then at that point, given that we are the anti-AI trade?
That is what we are all thinking at this point of time, that if you take the long term, the AI story can't keep becoming the only story in the world, and there will be bigger benefit for the AI users like the Indians. And we are hoping for that pivot, but that pivot has not yet happened. Are we saying when it will happen? Maybe it requires a bigger AI correction in the world. It is threatening to come, but it's not happening. And if you look at it, the kind of investment being made by many companies, just because they want to be part of the AI race, whether they are going to get that return on investment on all those investments is not known to people, but they are doing it. So that's why it will happen, but that's why patience is going to be tested. Luckily, our macro is good, our normal economy is doing okay, so I think we will still have a situation where we can get moderate returns, but to get big returns, we need a slightly different environment.
Which is what?
No, we need to have a situation where India is seen as a beneficiary of all that has happened in the world on AI. And the rest of the world could be deemed a loser. Today, if you look at an emerging market fund, they are very happy investing in Taiwan and Korea, which make memory chips and semiconductors, and they don't want to invest in India. They don't want to invest in IT services industry. This week, many of the software companies actually fell sharply in US. So that trend has to change, and people have to feel that it's not the semiconductor and memory chip companies which are going to make money. It is going to be the services companies which are going to make money. If that transition happens, I think clearly we will be seen as the winner.
I want to just draw back to last Sunday, the budget Sunday, and what equity markets did fortunately got undone by the India-US trade deal getting sealed. But that immediate knee-jerk reaction after the STT hike, would you say now in retrospect that was unwarranted?
See, the fact is that there are a lot of traders in the market. What the government has done, forget only equity market. If you look at it, even in gaming, they did take a decision that people should not focus. They increased taxes on gaming, made it, and did something like that. You know, having been part of equity market, and I was a stockbroker between 94 and 2004, I had not seen individuals make money in derivative markets. So I mean, obviously it's a zero-sum game, so someone else made money. So I think the step done by increasing STT was a welcome step. But we all knew that it's not a step which is going to give returns immediately. It is going to benefit the investors in the long run and not in the next few days. So that's why
The knee-jerk reaction was likely, but you know, finally at the end of the day, the government is trying its bit to make the cash market bigger and the derivative market smaller. I hope they succeed, because it's necessary, because it is the cash market which actually finally helps the creation of I mean, investment opportunities, new companies coming, not the derivative market. So the derivative market becoming bigger and bigger is not going to help the economy. So I think it was a welcome long-term step. Always, you know, how the market reacts is on one day is not very important, and that is how we look at it.
But Naren, do you feel that it's a bit of a double-edged sword? While there are interlinkages between the cash and the F&O market, but in that sense, what this move is going to do, and this is the second STT hike that we've seen, it's going to definitely impact the volumes in the market.
Yeah, but such a high the volumes in the cash market should also go up. Now with the STT being much lower in cash, I'm hoping some of the derivative market moves to the cash market, which is a more healthier market. So I think, you know, volumes in a market alone don't determine what is happening to the market. I think what is important is we should have a capital market which is able to raise money for the right people. Capital allocation has to be reasonable. If you create a capital market where it's too easy for anyone to raise money and that money gets wasted, that's not a good capital market. So somewhere a non-exuberant, super exuberant capital market is actually good for the long term. So I think somewhere all these steps done actually moderate certain things and actually help the long term the market rather than the short term.
Beyond the tax noise, Naren, would you say that the budget did enough to not boost the morale of the investor on the street?
See, actually, you know, if you go back, you know, I've seen now almost 37 budgets, but it is impossible for, you know, the union budget with GST happening outside the budget and the level of taxes today in the economy, that every year you expect the budget to be some very big event and a lot of things got to change dramatically. All these things are impossible at this point of time. If you take the last year, whatever tax cuts was possible happened. If you look at GST cuts, it happened in September, October. Income tax cuts on the scale that happened last year, if you think it can happen every year, it's impossible. So I would say that I think we still think that we are in the 90s and every year the budget should do massive changes. I mean, today the budget is an exercise in explaining what the government is up to, but it is impossible for any government to come and create what we call big changes in taxation, big changes in this, because it is impossible. We have a much more stable taxation regime. So if you want to go back to 90s, I think it is impossible. It would be a disaster if we went back to 90s. In 90s, in every budget, we had 10% drop in customs duties. So, you know, imagine everyone would wait for that budget and it would be an event. I don't think we are in that phase. How to de-dramatize the budget for the investors, I do not know how to do it, because everyone wants a budget to be dramatic. It can't be dramatic. That's why the Part A is actually a statement of what the government has done over the year, because there is nothing, you can't dramatize Part B, because the Part B cannot have too many changes. And that is a reality at this point of time.
And to give it to the government, there was so much which was done all through the year, the previous year, that is outside of the budget. But having said that, what was your budget scorecard?
Yeah, we don't have something called a scorecard. See, you know, we believe in, you know, we look at current account deficit, we look at fiscal deficit, we look at inflation, we look at growth. So if we look at these indicators, we have a situation where things have been stable for years. If you leave aside the COVID year, I would say that all these indicators have been stable, and therefore I would say that the budget, forget the budget scorecard, the economy scorecard has been decent. If you look at the last 10 years, the improvement in income tax computerization which has happened has ensured that almost everyone who actually has a fixed deposit has to pay tax. Anyone who trades in the market has to pay tax. So all those things has resulted in a good increase in income tax. So I would say more than the budget scorecard, I think some of the processes that have improved in tax collection has been good. And the entire macro has been reasonable. Of course, I would say state government fiscal deficit is a source of worry. I think if it went back to what it was, about 1% lower like it used to be 5-6 years back, that would be beneficial. But that is more at the state government level than at the central government level. At the central government level, we are at possibly at one of our lowest fiscal deficit ever at this point of time.
Narayan, I recall that you had warned people about the silver horror show which is now playing out. I mean, a 37% correction in a single day and even more than that till date. What would you like to say investors who are now catching on to the silver and gold rally? There is that massive FOMO feeling still out there.
See, actually, we did some work on silver. We found out silver is a small cap stock where you don't have earnings and you don't have dividend yield. But it is a stock which is traded across the world, so it can be manipulated by anyone in the world. It was manipulated 30-40 years back by someone called Hunt Brothers, if you can go and look at it. So frankly, it's a commodity where if people want to have speculative fun, they should do it, because it's a product where you can have movements which are, and it has now caught the flavor of everyone all over the world, not just India. China, it seems, is much more, and everywhere in the world. So you have a product which is like a small cap stock. Is there a price to earnings in silver? Answer is no. Is there a price to book in silver? The answer is no. Is there a dividend yield in silver? Answer is no. Is there a discounted cash flow possible? No. But I think silver can go up substantially. It can go down substantially. Can anyone genuinely make a case how it will move in the next 1 month? Answer is no. So what we see, we are basically custodians of public money. So a few years back, we did give a buy call on silver. At that time, we had a framework called Nifty to gold, Nifty to silver, S&P to gold, S&P to silver, and gold to silver. On all those ratios, it had become extreme. So on that extreme view, we had given a call that invest in silver. But today, it is absolutely complicated. So if someone is trading silver in a big way, that person is basically a trader. He's not an investor. Can anyone know what will happen to silver tomorrow or day after? The answer, I can challenge, no one knows. Can anyone, because it's a globally traded speculative commodity with such low amount of money which is available, with such low stock, that anything can happen to it at any point of time. So our job as custodians of public money is to highlight the risk. Do we know what will happen to silver? I really think we don't know. So we try to tell people, if at all you are very keen on silver to be part of your portfolio, or precious metals to be part of your portfolio, invest in multi-asset category. At least you are not investing 100% in it. And at least gold is a mega cap. So when we compare gold and silver, gold is a mega cap, silver is a small cap. So at least from that point of view, gold is always safer because it's a mega cap. Does gold also can be valued? Answer is no. But at least gold, there is so much of global central bank ownership of gold that maybe if it goes up 20%, some central bank will book profits. And if it goes down 20%, I think it will be some central bank will buy. So at least it's a mega cap. That is how we think about it. But it seems to everyone, I think everyone in the world, I think wants to have a thrill of trading. And trading in something where there is no proper valuation model is even more thrilling. For some time they did crypto. Luckily in India, the regulator stopped it. So they did crypto, they all lost money. Now they left crypto and they have moved to silver. That's what it looks. Look at crypto at this point of time. No one talks about crypto. Luckily in India, we don't have too many people trading crypto, but just see what has happened to crypto as we speak today. Again, can anyone predict crypto? Answer is no, because it is another product which is very difficult to predict.
Absolutely. So I'm wondering, you described silver as a small cap, gold as a mega cap. How would you describe India equity markets as a whole?
No. India equity market has got fundamentals. It may not be a cheap market, but it has fundamentals. There is something called price to earnings. India is the services capital of the world. It has created a lot of good companies. So you are trying to compare a product where you can't understand price to earnings and price to book with a market which has generated cash flows. It has generated dividend yields for a lot of investors. Yes, it is not as cheap as it used to be in 2020 or 2013 and all that. But that is different. But at least there's you can't compare an equity market with gold and silver or crypto.
I was just trying to tell you how the retail participant out there is thinking nowadays. But tell me, Naren, 2025 has been tough at an individual portfolio level, right? Small and mid caps have gotten thrashed out. At the same time, there has been that massive $22 billion of outflows that we've seen. Last week, we've seen just barely 2 days of inflows coming in. What will it take for the investors to come back? And B, what's the outlook for India equities going forward when it comes to small and mid caps in particular?
See, investors have been continuously there in mutual funds from 2013 till today. I mean, I keep telling my colleagues that, we have been in one of the good industries that has seen a good growth from 2013 till today. So in direct equity investing, the challenge is that people think money can be made too easily in anything. So everything requires a process. Everything requires a kind of framework with which you invest. So if you followed that, obviously in 2024, you knew that the market was overvalued. Now, the second challenge at this point of time is that people think that small cap cycles will happen overnight. I mean, obviously, small caps can also go up, but we have seen small cap cycles being, last quite some time. In fact, there was a 90 cycle which ended in 95, 96, which restarted only in 2002-03. For 6-7 years, someone actually didn't make any money in small and mid cap. So I would say that for people to believe another small cap super cycle will start as soon as it ended in October 2024 is wrong. At the same time, is the euphoria gone out of small caps? Answer is yes. There seems to be a reasonable amount of disinterest. As investors, your public money, we always look behaviorally. So are we seeing a situation where behaviorally we are at bottom in small and mid cap? Answer is no. So we are somewhere in the middle. It's not like silver, it's somewhere in the middle.
There comes the comparison. So if I were to ask you, Naren, looking far out the year ahead, what should a portfolio strategy be? And I know one size doesn't fit all. Everyone has a very different compulsion and reason and purpose for investing. But should one have an asset allocation strategy? Should one be as diversified as it played out in 2025? Should you have concentration of different sectors that you should be investing in? Or should you go by market cap categorization?
We have never seen a situation like today. Residential real estate, if you look at Burli, Gurgaon, all these places look so costly. If you look at precious metals, we have spoken enough. If you look at equity market, it's not cheap. If you look at debt market, I think 1 year fixed, the yields are closer to the low rather than closer to the high. We have never seen a situation like today where every asset class is not cheap. At the same time, barring precious metals, I won't say anything is in euphoria. So I would say that you can definitely, you'll have to practice asset allocation. And then at some point of time, what happens is that there'll be some asset class which will go through some period of problems and gets dislocated. Then at that point of time, you get an opportunity to increase your asset allocation in that area. Will you do it at that time? That is a challenge. But that is the whole goal of, see, you can't, everyone wants, you know, good news and markets to be cheap. In 2007, markets were very, very good, but markets were very costly. In 2008, post-Lehman, everything was cheap. The news was very bad. Go to 2020, everything was looking bad. Markets were cheap. So people want a combination of good news and cheap markets. You're not going to get it. You'll get good news and costly markets, bad news and cheap markets. So you have to make use of it. But when will these cycles happen? It's tough, but this is a rare situation where everything, Howard Marks, my guru, says, you know, investing, the entire thing is like a moment, it's like a pendulum. It moves from extreme fear to extreme greed. For a change, I'm seeing, barring a few things like silver, I would say everything is somewhere in the middle. So you will have to be in the middle then. If something goes to extreme fear, it's a very good opportunity. But unfortunately, you're not in extreme fear anywhere. Barring silver, I would say nothing is in extreme greed also. So you avoid, you can't take extreme, you don't need to be very bearish also. So you're somewhere in the middle. Rarely you have this situation, but today we have this situation. But so that's why people ask, you know, we have divided cycles. We call it bust, then best, then we call it boring, then boom, then bubble. So today we are in what we call a boring cycle.
Yes.
So, but in boring cycle, what happens is you can invest, but don't expect to make big money. But you should invest. It's a boring cycle. It's not a boom or bubble cycle that you have to fear at this point of time.
But this is not the time to increase allocation to equities, is it?
Compared to 1 year back, we've been telling people it should be higher. But at the same time, this is not a time when, you know, you convert everything to equity. Debt has its own attraction even today. I don't think this is a time to convert everything to equity at this point of time. But at the same time, are we in a situation where we should have more money in equity than 1 year back? Answer is yes.
Naren, since you are a student of behavioral patterns, I want you to do the SWOT analysis of India equity markets right now. The strength, the weakness, the opportunity, and the threat.
The strength is, see, we have created one of the very good capital markets in the world, both in terms of the fact that most corporates today, you know, having grown up in 80s and started working in 90s, see, at that point of time, corporates did not even think that they should work for the investor. So today I can see so many corporates working for the investor. And, you know, India is, you know, when we used to meet, surprisingly, in the last 1 year, no one has told me. But before that, people used to tell us, we invest in India because when we meet your corporates, we feel like investing. Because they talk in English, they understand investing, and they tell us what we want to hear. I don't know why in the last 1 year they seem to have forgotten that, the foreign investor. But I would say that's the strength. The weakness in recent times has been that valuations never become very cheap. It's a bit boring after 2020. 2020, 21 was the last time when markets were really cheap. After that, you know, as an investor, you know, you want cheap markets to actually make big money. It's missing. Opportunity, I think clearly how India is the best demographics in the world. How we are going to make use of the demographics to grow much faster than all the other countries in the next decade is the biggest opportunity. It is the biggest challenge. It is the biggest threat as well. Because how artificial intelligence shapes up and then becomes a threat to this whole opportunity of our good demographics, something which we don't know. So people ask us, what will happen? Actually, the truth is we don't know. I mean, did I know 20 years back that we won't be able to understand, we won't be able to live without our mobile phones? We can live without our purse, but not live without our mobile phones. Did I know that? The answer is no. Like that, it worries us that in artificial intelligence, what's going to happen in the next 10 years, 20 years to all of us? We don't know. So that is the challenge. This is how we look at it.
So if I were to ask you one sectoral fund where you think all of us should be investing in?
No, we've been actually focused on things like, we believe in economic cycles. So we have something called as business cycle, which keeps rotating. So because the world is changing so much, every day we have to think about what is US president thinking of the world, what is it that he's thinking, what does he want to do. So it has become such a volatile thought process of geopolitics. If you look at it, there are problems in Gaza, there are problems in Ukraine, there are problems in Venezuela, there are problems in Iran. So, it's such a volatile world. So, anything where you believe in cycles and focus on economic cycles like business cycle works much, much better. Actually, over the last 6 months, people have asked, give me a sector. But each sector has this problem. FMCG has low growth, IT has low growth, pharma has different challenges. Some of the other sectors seem costly. So, we have not been able to, banking looks fine, but the growth, it's a competitive industry. And it is possibly an industry where everyone already has good amount of money. So, although the outlook looks good. So, every sector has challenge and there are some problems. So, that's why it's difficult. So, I would say, we play for moderate return. People ask me, what is moderate return? I say, I will not tell you. Because if I give you a number, you will give us the money. Saying this number I'm happy with. So don't give a number. If somebody asks me what was the moderate return which you finally expected, I'll tell you later, not today.
So a multi-asset fund or just the index ETF?
Yeah, definitely asset allocation is the way to go. We are not believers in ETFs much more. We definitely believe in asset allocation over ETFs. ETFs is good. If you have markets dirt cheap, you want to invest, I think that's a very good time to invest in ETFs. With markets being where it is today, it is asset allocation all the way.
Okay, Naren, thank you so much for your time today. Lot of insight on various assets, on how Indian investors should be approaching the market right now. Thank you.
Thank you for that, Aisha. Thank you, Mr. Naren. Maybe request you to stay on, and Aisha, maybe request you to please present Sir with a token of our appreciation. Ladies and gentlemen, can we have a round of loud applause?
Absolutely. That was S. Naren dropping truth bombs for us over the session over the last 20 to 30 minutes, including bits on silver,
Gold.
Crypto as well. We'll speak about crypto, but in this budget week, in fact, he made a comment that if you want a dramatic budget, you should go back to the 90s. But coming to crypto, isn't that your next session, Sumit?
Exactly. He's giving me great food for thought for me and my next speaker. Now, whether you're a millennial looking to diversify beyond traditional asset classes, whether you're a Gen Z investor building a modern future-ready portfolio, or whether you're a Gen X investor keen to keep pace with India's rapidly evolving investment landscape, the opportunity set today has never been more exciting,
Absolutely.
Shivani.
It's very, very exciting, from the new age financial instruments to emerging asset classes. Investors now have a wide range of options to diversify their portfolios and unlock new avenues of growth. To help us decode some of the top hot investment themes shaping the market right now, I would like to invite Pranav Pagaria, SVP Finance and Strategy from CoinDCX, to share his perspective. And then I would also request, of course, Sumit is right there, my co-anchor Sumit, to moderate this fireside chat. Take it over, Sumit.
Thanks for that, Shibani. Pranav, I had prepared a set of questions, and we discussed also we'll be having this discussion, but we have to now start with what Mr. Naren said. And he's got a certain view on cryptos. I just want to get your view on cryptos, because he spoke about how, yes,
cryptos are also volatile. Just get us your view from your side of the fence.
Yeah. So, volatility is what, people are generally wary of when they talk about crypto. Thanks to gold and silver, we don't have to explain it anymore. It's the same market. So price action, will keep defining how short-term dynamics are, but ultimately it's all about fundamentals. What we say in CoinDCX, the biggest risk that we see is, not volatility. It's actually emotion, and emotion leads to typically one of the most extreme outcomes. You buy at the extreme fear and you sell. You buy at the extreme greed and you sell at the extreme fear. Now, that's what happens when people, make decisions based on emotions and try to time the market. Crypto market, similar to equity market, and pretty much different from, say, a commodity, which, Mr. Nareen mentioned that commodities doesn't have any yield, no project, no income, etc. So no mechanism of identifying how to attribute value. It's not similar to a commodity. It's pretty much similar to an equity. And there is a lack of education, understanding in the Indian market on how to value crypto. That pretty much results in people feeling that it's an asset which, it's just based on price action and no internal intrinsic fundamentals.
So, important point you spoke about, and of course, the oracle of Omaha, Mr. Warren Buffett, has also spoken about, be fearful when others are greedy, be greedy when others are fearful. So yes, in that sense, there is commonality there. I know CoinDCX is doing a lot of these educational videos and other educational initiatives. Tell me a little bit about that, because exactly what you spoke about, it's important to keep the emotion out of the investing. Very easy to say, very tough to do, because
Absolutely.
I mean, if there is always a lot of emotion with money. But what are some steps that you are seeing to guide Indian investors on how to invest in crypto?
Yeah. So maybe I can talk about two things. One is the fundamentals of crypto, and second is how to keep a risk-first approach as against a return-first approach, right? People generally come to newer asset classes, digital age asset classes, with a short-term outlook, of making life-changing gains, which is not the way you look at these markets. Now, historically, obviously, if you look at Bitcoin, it has given returns, which is an IRR of north of 60% as compared to traditional equities and so on, where you get 13 to 15%. So it's certainly lucrative, and people would want to invest. But the fundamentals are the most critical thing to look at, right? Bitcoin is a digital gold, so I wouldn't say that it has a lot of fundamental backing. It goes on demand supply, but all the other assets, including Ethereum, right? There is a fundamental behind it. There is a chain known as Ethereum chain. There are projects who are developing projects, developing startups on those, the chain, and then there is a revenue stream that goes on. And there is a mechanism of doing valuation, of how do you value a particular asset. So those fundamentals are really what determine the long-term outlook of any particular asset. And therefore, most of the crypto assets typically go work on that fundamental. Short-term price action, as I was coming in, there were multiple people who asked me about the recent fall in crypto, right? So I would like to say that these are all very short-term. The macroeconomics, as crypto is also a global play, right, and not an Indian play. There are multiple institutions, multiple players that could determine or influence the short-term price action, but that doesn't determine or deter the long-term fundamental. That pretty much remains intact. So it has to be seen from a long-term perspective. The kind of videos we do, and there are a lot of workshops that we keep doing in every city. We try to talk about the fundamentals of crypto and also try to talk about how to take a risk-first approach as against a return-first approach when you invest.
So, Pranav, we're talking about new investment ideas here on this session. You mentioned about Bitcoin, of course, the most famous cryptocurrency, and then there's Ethereum, Tether, all of these. Is there any new cryptocurrency that investors should be having on their radar that could promise, that would be promised for them, that would bring them maybe good returns in the long term?
Sure. So most of the people know about Bitcoin and Ethereum, and rightly so, because they form about 70% of the global crypto market cap. They've earned this because of the resilience, scalability, and the long-term adoption, that has been in both these assets. But crypto industry in general is very vast. There are a lot of projects that, that keep coming up and multiple sectors. So instead of talking about any particular crypto token, I'd rather talk about certain themes, which are new-age themes, which basically are, very promising and, could be very, very lucrative if looked at from a fundamental long-term investment perspective. Some of them being real-world assets. In India, of late, there's been a lot of discussion about real-world asset tokenization. A lot of governments have started tokenizing their records, etc. So real-world asset tokenization is one such theme. Then we talk about AI. Now there is a good amount of collaboration and calibration between the AI world and the crypto AI world. There are a lot of crypto AI projects who work on decentralized infrastructure. Infrastructure again is a key theme today, where people talk about data warehouse, people talk about cloud computing. Right? These are some of the themes which are very, very intrinsic and developing, and multiple global projects are being developed in these areas. So these are some of the areas where there are multiple emerging projects which should be looked at fundamentally, and those can be good from a long-term investment perspective.
Okay, so those are important topics that people can keep in mind. There's been an interesting survey that SEBI conducted recently, and the chairman also spoke about it a couple of days ago, and it's about awareness among Indian households about the different investment options that are available. Now, of course, fixed deposits and recurring deposits at the top, with 98% of the survey takers aware about it. Mutual funds were at 53%, equities, stock shares at 49%. Cryptos was at 15%. While FNOs at 13%, corporate bonds at 10%. What are your thoughts that population of at least 15% of that population is aware of cryptos?
Yeah. So, the initial take would be 15% for crypto awareness is more than some of the traditional assets. It shocks me in some sense, because these assets have been here for ages. When you talk about bonds, that brings us to a very important fact, that if the product is not embedded in the banking system, like your fixed deposits and so on, even derivatives, it is not so embedded. It is something which is different, and therefore a bit of complex or a out of the banking system concept. There is a need for financial literacy, so that people understand what these products are and they are able to take benefit of it. As Mr. Narendra also mentioned, that a portfolio should be well diversified. So there are various new avenues that are coming in the market, and therefore it is important that at scale we talk about financial literacy. At CoinDCX, our prime motto is to ensure that we give financial literacy to people about crypto, so that they start looking at it as a new asset class which they can easily add to their existing portfolio. So yeah, I would say that crypto, the kind of awareness it is, it's a positive shock to me. I would say there is a organic curiosity in the Indian market. Maybe I would want to talk about a survey. Chain Analysis is a global organization which does a crypto-related survey on an annual basis. And year on year, India has been rated topmost adopter of crypto. So therefore, the awareness about crypto in the Indian market is significant. And therefore, it is one of the very lucrative markets for various other crypto players who would want to set up their base in India and explore and optimize on this opportunity. So therefore, it is important that, and obviously it's a responsibility for us as CoinDCX being the market leader to promote financial literacy, so that a systematic and a responsible investing is being done by people, so that people are able to take the benefit of the returns here.
So are you saying that we could maybe look and see more players coming in, more competition for you for CoinDCX?
So we would say, see, equity market, as you said, there is a 50% awareness, and still there are new players coming in. The market is very small, very nascent at this stage. New players are always welcome. As many players as you'll have in India, the market will expand, because everyone will try their best to promote financial literacy awareness and try to make the market broader. So we are of the view that as many players come, it will just expand the ecosystem.
It will always be better for the customer, the consumer. Yeah. What would you, if you're looking at your vision, kind of CoinDCX's vision also, like this survey, 15%, what do you think needs to be done both from a government or regulator point of view and industry point of view to make cryptos more and more a part of the Indian households' asset allocation? What more needs to be done?
Yeah, no, that's a very important question. I would say that there are three things that are to be done at a macro level. One is bringing in more clarity. Second is bringing in more confidence. And third is suitability. I'll talk about all three of them. Clarity is very critical. Now, I still see a lot of people in India talking about crypto as crypto is not legal. that's lack of clarity, right? Crypto is legal, CoinDCX being, one of the biggest exchange in India, still people feel that crypto is not legal. So therefore, lack of clarity. From the government side, the expectation is to come up with regulations. We've seen regulations in multiple jurisdictions, including the US, UK, our neighbors, Middle East countries, Dubai, Bahrain, and so on. There are regulators, there are regulations, there are multiple companies who have licenses, and they are operating multiple institutions working with them. So from government perspective, it is very important to come up with regulations so that people understand that crypto is legal. While we are doing our bit, but if regulations are around, it'll make sure that people understand that it is legal, and there is a wider participation from the institutional network also, the likes of mutual funds, insurance companies, etc. There will be a broader acceptance, which will improve the market dynamics for crypto. That is one. Second is confidence. Confidence has to be built by the industry. So we need to be very transparent. We need to be very high from a governance perspective, and we need to give that assurance to the investors that their money is safe. And if they invest with us, we are not a fly-by-night player, and we are here to stay with them for the long term for their benefit. And that is what we keep doing, and we'll keep accelerating our pace of doing it over the years. So we'll bring that confidence as industry. And third, most important, is suitability. Now, suitability is more from an individual investor perspective, and it essentially means portfolio economics, right? Anything that I would want to invest in should make sense from a portfolio economics perspective to me. What portfolio economics essentially means is that if I'm investing in a particular asset, the kind of returns I'm making, whether I'm able to take that money to my pocket or not. Crypto, unfortunately, there have been recognition from income tax, but it's been a punitive recognition, right? So a flat 30% tax, no set-off of losses, you don't get carry forward. So therefore, it doesn't fit, the tax framework doesn't fit the portfolio economics of an individual. So people are wary of investing because they do not get the returns directly coming in their pocket. In contrast, if you see the US, the International Revenue Services, IRS there, has come up with very clear regulations, which is at parity with equity. Similar with UK, where HMRC has regulations which are again at parity with equity. So therefore, portfolio economics, if you're investing for long term, you should not be taxed as much. So therefore, there is an intrinsic ability and a push for anyone to keep investing in that asset for a long-term perspective. So that portfolio economics for now, because of the tax regulations, is not working. So that has to change. There is a punitive recognition, but it has to become a parity going forward. So that recognition is again very important.
You spoke about government recognition, all this tax angle. There is this new change that's supposed to come in from 1st April 2027, where Indian crypto exchanges will need to start sharing and receiving cross-border cryptocurrency transaction data. Now, obviously, this will help bring about transparency, will take us to the global stage, put us on the same global standards. But on the other end, the budget has put in strict penalties for if any default happens in this. How are you getting ready for this change?
Yeah. So, I'd like to mention here that CoinDCX is one of the most compliant exchange, because we always operate in a compliance-first manner as against a business-first manner. Financial Intelligence Unit, which is the AML watchdog of India, every crypto exchange has to be licensed by Financial Intelligence Unit, and there are significant compliances associated with it, which we are already complying with. This compliance is again in addition from an income tax perspective. There is already a reporting requirement which we do to income tax. This is in addition to it, based on the OECD framework, and therefore supports international exchange of information. We are pretty much geared up to do it even now, and it's a welcome move from us. So far as penalty is concerned, we are very happy that there are punitive provisions in the Income Tax Act, and these things basically help in two ways. One, it helps building confidence of people that if an exchange or an operator is doing something wrong, they are penalized. And second, it also makes sure that only the serious players stay in the market and thrive. So we are very happy with whatever new regulations have come.
Pranav, I'll ask you a little bit of a tongue-in-cheek question, all right? So to invest in crypto, it's a new age investment option. We admit that, we understand that. So definitely maybe the millennials, the Gen Z, the I don't know what now, the next Gen Alpha are more comfortable with this. But if I have to talk to someone, like, if we have to talk to the parents, our parents' age, What is your pitch to them about investing in cryptocurrency? How do you explain cryptocurrency to them and get them to put some money in it?
Yeah. So, you know, whenever any new thing comes which you are not aware of, you are generally wary of it. You know, the Harshad Mehta times of share market, people used to feel that that is a gamble. So, you know, it takes time for people to understand and adopt to new things that are coming in the market. But at the same time, it is essential to be a part of the portfolio so that you don't lose out on the opportunity. So there are two ways in which you can explain someone. One is that, you know, you make them aware about it. So, you know, they know exactly what this is and what is happening in the global markets and so on. There are a lot of people who are already investing in it. And second is that, you know, they look at some experts, and if there are some experts who are already investing in this, they get confidence. So we try either of this. You know, either you tell them that, you know, these people who are experts, they understand share market and therefore they are also investing in crypto, so get validation from that, or you make them aware of how to make the investment.
Okay. When you talk about equities and share markets, there are broadly two kinds of players, two kind of retail players there. One are the long-term investors जो basically पैसा डाल दिया, भूल गया, निकालना होगा देखेंगे 10, 15, 20 साल बाद. There are others who are day traders or who do FNOs to try and make money over the movements of the market. Do you see that in cryptos there can be these two similar kind of broad buckets of players, or is it better for people to just like, you know, put money and just like forget they have this until maybe like 20 years later?
Yeah, it's again a very important question. So this market is extremely suitable for both the kind of investors. If you are a long-term investor, you know, you could look at something like an SIP or stick to some of the themes that I spoke about, right, which are fundamentally good, and invest and forget. Though that's the way of looking at a cash market perspective. But if you are more of a trader or you want to, you know, make that as your business, like possibly do a day trading, etc. The crypto market being global in nature, there are two benefits. One is it's a 24/7, 365 days market, right? So you are not subject to the shocks of the weekend and, you know, ultimately the things changing overnight. So that's the big benefit. And second is because it's global, the liquidity is enormous 24/7. So therefore you get sufficient amount of liquidity to trade. These are the two things that you know, a trader would typically need to trade. So therefore it's equally good market for anyone who's doing in equity. Both the kind of investors can pretty much do the same things and better things in crypto as a market.
Okay, Pranav, before I let you go, last question. Are you able to give our audience, like for the earlier session, Aisha was trying to get Mr. Naren to pick one sectoral fund or things like that. Are you able to tell our audience where they can put some money to make a quick buck in crypto?
See, I would like to qualify by saying that there's nothing like quick buck. You know, you might just get stuck when you start investing with that motive. But, you know, a general fundamental advice to everyone is that if you don't understand the market and you still want to start, Bitcoin and Ethereum are the best starting points. And SIP in Bitcoin and Ethereum as against timing the market, that is the best way to go forward from a long-term perspective.
So pretty much what has stood the test of time in other investment options, which is where invest regularly in a disciplined manner in SIP, like, I mean, that's the equivalent of what RDs are.
Correct.
In small amounts, keep putting for the long term. That could also work in crypto. Thank you so much, Pranav, for your time and for this enlightening session. Thank you so much.
Thank you so much.
Well, Sumit, may I request you to present Pranav Pagaria with a token of our appreciation. Well, thank you so much for those sharp insights, some Shakespearean insights, I must say, like emotion in investing. Mr. Pagaria spoke about, speaking about how people buy with extreme greed and sell with extreme fear. Now, moving on, let's speak about your next session, Sumit.
Exactly. I really enjoyed this one,
yes,
and I know I'm going to enjoy the next one also.
Absolutely.
So the Union Budget 26-27, it places MSMEs firmly at the heart of India's growth story. And therefore, because there's a strong focus on accelerating manufacturing through enhanced access to credit, dedicated growth funds and structural reforms aimed at creating champion enterprises.
Indeed, Sumit, with funding commitment over 30,000 crore rupees across key programs supporting manufacturing, supporting export and technology upgradation, intent is clear, but the big question still remains, will these measures truly kickstart MSME manufacturing at scale? To help us decode this and explore what lies ahead for India's MSME ecosystem, I would like to invite Chandrakant Sarunke, President, SME Chamber of Commerce, Mr. Tilak Raj Bajalia, who's a member of Board of Trustees, India SME Forum, and Vijay Mani, partner Deloitte India, to join us on the stage for this panel discussion, again moderated by my co-anchor, Sumit. Mr. Tilak is not in today, but we have two distinguished gentlemen joining Sumit on the stage. Over to you, Sumit.
Yeah, unfortunately, Mr. Tilak's gotten stuck in traffic, which is, I mean, we are all here from Mumbai. We know how that works here. Mr. Salonke, Mr. Mani, thank you so much for your time. Mr. Salonke, President of SME Chamber of India. I just want to start off with you because the budget has been very it's kept MSMEs in focus. Wanting to first just get your opening thoughts on the budget for MSMEs. What is your key takeaways?
First of all, thank you, ET Now, for inviting to share my thoughts, particularly India Investment Summit. If you look at the growth of Indian economy and industrial growth, especially contributed by the SME sector. But looking at this budget, I'm not happy with the budget, with the finance minister, for providing only 12,000 crore rupees only for the fundraise. But there are many champions in the small, micro, tiny industries. They are looking value addition, support, and particularly the level playing field when they are putting efforts for the growth of Indian economy. See, usually looking at the the process of this budget, I was there. I had given a lot of inputs to the Honorable Finance Minister. If we look at particularly expansion of manufacturing activity in tier 2, tier cities, this is a very difficult to run the industry because the banking sector is only the source for the financial fuel, and others financial fuels are very costly. So therefore, I suggested the government particularly to provide more incentives, more value addition services, particularly for the SME entrepreneurs. Those are putting efforts for employment generation, industrial output, and export promotion. So therefore, this budget is not so beneficial to the micro, tiny, and small industries. Particularly, they are looking for and they're expecting from the government if we have to march towards Viksit Bharat.
Absolutely, and it's important to always promote entrepreneurship, to get people, like we've always been hearing about the fact, to get people to make jobs rather than be in jobs. Mr. Mani, I just want to come to you on your the space that you're the expert in, which is on the credit space. Looking at the current scenario and more like an opening comment, just would want to get your thoughts on where do you see the credit availability for SMEs, MSMEs? What more can be done? What is some maybe thoughts that you have that could help boost this sector more?
Yeah, I think when you look at the overall picture, you see a tremendous scope for improvement, and I can understand Mr. Salunke's frustration. There are about 75 million MSMEs registered under Udyam, and a bulk of them are micro enterprises. When you look at the number of enterprises registered for GST, there are about 15 million enterprises. But when you look at the MSMEs that actually get access to formal credit through the banking system, it's a small fraction. Forget about 75 million. It's a small fraction of that 15 million as well. To be fair to the government, a lot has been done. I think the CGT MSc program is a good program. It's been running for more than 25 years. However, I think the uptake of the credit guarantees is a small fraction of the overall contribution of MSMEs to the GDP. And just to give you a sense of the numbers, the total MSME contribution to GDP is about over 100 lakh crore. And when you look at the cumulative guarantees under CGT MSc, it's in single-digit percentages of the contribution to GDP. So I think while a lot of good things have been done, the TREADS program is another good example. But I think more needs to be done to drive credit directly to micro enterprises. And there are a number of things that we can talk about, ways to do that.
Okay, we'll come back to that in a bit because definitely it is important to drive that credit, let it be easily available to the MSMEs to just help them boost their business. Mr. Salunke, you know, Mr. Mani also spoke about TREADS. So I just want to talk to you about, you know, the thought of linking GM with TREADS and securitizing the receivables. It's being seen as a breakthrough for MSME liquidity. How do you expect this, how are you seeing this to genuinely improve cash flows? Because the cash and the credit is one of the most important pillars for MSMEs to stand on and, you know, expand or even carry on the business.
See, first of all, government and even finance ministers not understand that TREADS is made compulsory for last 5 years. You know, every budget they are emphasizing the TREADS. It is a compulsory for every corporate, every PSUs. The TREADS is built up and advocated by us, by me particularly. When Mr. Raghuram Rajan was the governor of RBI, I said either you change the NPA norms or bring some platform where our MSME sector will get receivables on time. Particularly, if you look at the corporate level, most of the corporate or buyers particularly, what they do, they deal with the entrepreneurs or enterprises that if you will not put a condition that we have to list on a TREADS, we will not buy from you. So therefore, many entrepreneurs, they have to accept because we want to do business. Business nahi milega to company kaisi chalegi. So they want to have a business, so therefore they accept some terms, conditions there. But now, since the government, particularly finance minister, has announced from the TREADS, let us see next 3 months how many corporates, how many multinational companies, even medium-sized industries coming on TREADS, encouraging MSMEs not to avoid the listing on there, but to take advantage of this facility. I'm sure most of the MSME will not become NPA. The cash flow will be there, and definitely the GEM portal is beneficial, particularly for those who are looking to support or supply to large corporate, even the corporations and government agencies. So let's see how the TREADS is going to be work and how the government is insisting from railway to their all PSUs to take advantage of the TREADS.
Okay, thank you for that. Mr. Mani, I want to talk to you about one angle of credit because there is a lot of NBFCs that have started offering credit to MSMEs, business loans as they say. Do you see, I mean, besides banks, obviously, banks, large organizations are there, but a lot of NBFCs on the smaller scales. Do you see that market kind of going in a good direction, or is there too much already? Is there too much saturation? Is there room for growth? How are you seeing what's happening on the ground? What's happening on the grassroots realities?
Yeah, so I think while NBFCs have done a lot when it comes to credit products for MSMEs, there are a few inherent challenges. One is it's a very manual model. So it's very much dependent on a sales force going out there and a lot of information collected manually. A lot is dependent on the ability of that salesperson to collect the right information, relay it back to credit officers, and then credit officers exercising the judgment, which really slows down the process and also denies credit to a large number of people. So I don't think it's a very efficient model. There is a tremendous need to infuse technology and create public infrastructure where information can be collected, and not just reliant on the information collected on the field, but information that is publicly available. For instance, all these MSMEs consume utilities. If that information can be available, it can be a useful input into underwriting. For instance, if an MSME claims that the turnover is increasing, is the utility consumption also increasing at the same time, right? That will make the credit underwriting process more effective. Inventory data, if that inventory data is on chain, can that be available publicly? I think there's a tremendous need for initiatives to create infrastructure to collect data, and that will make the model much more effective. One other big issue is attrition of the sales force. I mean, a lot of NBFCs have high levels of attrition of these salespeople, and that also affects the dissemination of credit. So I think the NBFC model is very good. They have an important role to play, but I think a few things need to be done. One is data, which I talked about. Also, I think co-lending needs a bigger push. More standardization of APIs, more standardization of underwriting practices can make the collaboration between NBFCs and banks much more effective, and co-lending to really be a big driver. I mean, the credit guarantee scheme for co-lending has seen very poor uptake, right? That's another opportunity which can really improve existing models of credit dissemination.
Okay, great. Mr. Salonki, I just want to take that ahead to you. You shared your thoughts on the budget, but there are some other parts of the budget also that, for example, they saw the FM unveil the Biopharma Shakti initiative, allocation of 10,000 crore over 5 years. There have been other sectors. They spoke about setting up those content creation labs, which they're hoping will provide employment, entrepreneurship opportunities, content creation. Do you see these new age sectors blossoming to help more and more MSMEs set up shop in new age sectors, whether it's these, whether it's renewable energy, semiconductors? Do you see more and more movement there by way of MSMEs setting up shop?
See, they have announced this in budget, particularly how they are going to present the subsidy, grant, or value addition, the support for enhancement of the activity. But look at the, some MSME sector. Forget about micro and tiny, but small enterprises, they don't have a capacity to set up their own, the testing lab, or particularly in-house some innovation type system, or a value addition system for improvement of the product or design. But let's see how the government has, playing, because, we are working very closely with the DPIIT, and we are trying to support the entrepreneurs, particularly those are into manufacturing industry, for global competitiveness. And, insisting them and encouraging them to acquire advanced technology to enhance their productivity, quality improvement, global competitiveness, so that they can, survive in competitive market. Now, another point I have suggested the FM that last budget they have announced 10 industrial park. But that 10 industrial park, what is the progress? That not yet confirmed. Even I have suggested the Honorable Finance Minister to allow and encourage the state governments to set up private industrial park, ready-made industrial park, ready-made industrial units in each district. At least 500 units will be set up by the government, particularly in a private sector, with the private sector, or a JV or a SPV, so that local entrepreneurs can set up their manufacturing unit. They don't want to go from the rural area to the town. But somehow government is focusing on, but we are looking for more value addition, more support from the government, because we want to become the economically number one country in the world. We are looking at the making India as a manufacturing hub of the world. But for that purpose, government should come ahead with the more incentives, value addition services, grants, subsidies, and more on a development in policies. Because you look at the policies, implementation is very slow, framework is not changing, But we are doing advocacy, we are pursuing with the government, and one day definitely will succeed. Look at the, the opportunity for the MSMEs, those are into manufacturing industry, those are in service sector, to list on SME stock exchange. You have a collateral fee loan up to 100 crores to buy a advanced machinery equipment. In that 50 crore you can use for a project improvement. I am insisting from the banks to provide the 100% loan for setting up manufacturing unit. So let's see, the government is now pursuing, and support will be definitely to MSME sector. Then only we can march towards Viksit Bharat.
Yeah, definitely. It is, because obviously the MSMEs play a vital, crucial role. They're the backbone of the economy. Mr. Mani, today was the monetary policy came out, and it was obviously the last one in this financial year. The governors kept the repo rate unchanged at 5.25. Do you think a change of rate would have helped MSMEs, or do you feel that, obviously the RBI governor has given his reasoning behind it, and the councils also shared their thoughts?
Yeah, I think certainly the credit cost for MSMEs need to come down, but I think the biggest reason the credit cost is high is not because of the repo rate. It's because the risk premium is too high and the operating costs are too high. I think more work needs to be done to fix that. Also, I think while there is a lot of attention on working capital limits and term loans, I think more needs to be done for the simple, humble invoice discounting product. And while TREDS has done a lot to do that, I think we need to figure out a way in which the penetration of invoice discounting can grow by exponentially more than what it is right now. Because if you have the right data, the risk profile of the invoice discounting product is much more amenable to bringing down the cost of credit than alternatives like working capital. It's possible to bring the cost of working capital below 15% if we really focus on data and other ways of increasing the penetration of invoice discounting.
Okay. Mr. Salonke, we are here today at the ETNow.in India Investment Summit. Let's say you and I are having a conversation in the next 3 years at the 2029 edition of the India Investment Summit. What would you wish that you and I would be talking about the MSME space at that time?
Enhancement of manufacturing activity in each district. Second thing, financial flow from banking sector for less than 7% at the rate of interest. Third, level playing field for getting licenses, permissions in each district. Most importantly, market, because government has started finding new market when Trump uncle started imposing the more tariff and more rates on the India particularly, so that government become alert to find out new markets. If this was done earlier, so we will achieve our target. Another very interesting point, startups are not entering into manufacturing sector. We have to encourage, we have to support the startups to start manufacturing unit. See, starting manufacturing, it is not an easy task, but we have to start. Then only we can, compete with the China, Japan, Germany or Korea. Currently, our entrepreneurs are not entering into manufacturing. That is the main reason for market, manpower and money. These are the 3 hurdles are there. So therefore, I suggest all the friends sitting here, if you can encourage your new generation, your friends, your brother, sister, to start manufacturing, not single way, but at least make a group of entrepreneurs and start. Banks are providing up to 10 crore for the SME loan, collateral fee loan. 20 crore you are getting for from the startups, and 100 crore for buying equipments and particularly for capital markets and also exports purpose. So take advantage, empower your industry, empower your enterprises, so that next 3 years when we are sitting here, we can talk about contribution of MSME sector for making India as a manufacturing hub.
Fantastic. Mr. Mani, same question to you. 3 years from now, if you and us are at the 2029 edition of the India Investment Summit, what would you hope that we would be talking about?
I hope we would be talking about how the SME contribution to GDP has increased significantly from what it is today, and much closer to the 50% aspirational goal that we have. So hopefully we would be halfway through that.
All right,
And
fantastic.
also you can focus and you can also prepare India Investment Summit for SMEs into 2029.
All right, we will take that thought back, and we won't wait till 2029 for the India Investment Summit for MSMEs. We will take that back right to the team right now. Thank you so much, Mr. Saunke. Thank you, Mr. Mani, for your time.
Thank you,
for that
thank you,
insightful
Itina.
discussion.
Summit for MSMEs sooner than 2029, as Sumit mentioned. Sumit, may I request you to present the panelists with a token of our appreciation, and thank you so much for such wonderful insights. A huge round of applause, ladies and gentlemen. Thank you so much. Well, turning now photo opportunity. Well, thank you so much again for sharing those insights with us on how to put the India's MSME sector at the heart of the growth. Now, turning now to commodity space. सोना कितना सोना है
अभी तो पता चलेगा कितना सोना है कितना चांदी है.
So turning now to the commodity space, the recent rally in precious metals has been marked by extreme volatility. While a sharp correction may appear to be a classic buy the dip opportunity, however, markets expert caution the road ahead could remain turbulent.
Exactly, and it's such an important topic, and we will be finding about that. And you know, if this correction that experts say, is it truly an opportunity, or is caution still the wiser strategy in such an uncertain market? Mr. Naren also spoke about that.
Absolutely.
Now, to separate all the noise and help make some music out of that for our ears, I'd like to invite up on stage our next panel. We have with us Mr. Anindya Banerjee, Head Commodity and Currency at Kotak Securities, Mr. Naveen Mathur, Director Commodity and Currency, Anand Rathi Shares and Stock Brokers, and Mr. Saif Mukadam, Analyst at ICICI Direct. And to moderate this discussion, I'd like to invite up on stage Snehi Shah, Senior Analyst, ET Now and ET Now Swadesh.
Over to you, Snehi.
Good evening, everyone. We've convened here to talk about the budget, but the big hot topic right now in the market is the rally that we've seen in precious metals. Gold, yes, has always known to be a safe haven asset, a safer asset, something that all portfolios should have, but the kind of run that we've seen in silver this year and the unimaginable rally, of course, was met with a 30% fall on an overnight basis just very recently. Amid this entire setup, let's now try and understand and decode whether this dip is going to be a dip worth buying. Should you be waiting more? Is this a market where timing the market is going to be better than time in the market? So lots to talk about. Let's start by talking about what the generic outlook is on silver, and give us a sense of how first should one be reading into the kind of volatility that we've seen in the precious metal space, and particularly in silver? It's something that we've rarely seen in the past, and the 2 times in history that this has happened, it has not sustained. Do you think this rally, despite the current speed breaker that we are seeing, could continue going ahead? Sure. I think so.
Silver has made the headlines.
Mic seems to
I think it's on, right? Okay, fantastic. Silver, yes, it has made a lot of headlines thanks to its volatility, but we need to step back. This is a good time to step back because the FOMO crowd is out. Since last 2 years, when we have been advocating gold and silver, our theme was very simple: de-dollarization, and linked to that, deglobalization. This is the only reason why somebody should invest in a bullion, gold, and its sister, silver. Now, silver is a combination of monetary metal as well as an industrial metal. Currently, 60% of its demand comes from the industrial side, and it's just not an industrial metal like any other industrial metal like steel or anything. It is critical, from your smartphones to your solar panels to your BrahMos to everything. So that's the reason why globally all governments are now regarding silver as a critical mineral. And we just had a big alliance in US, in Washington, a couple of days back. So it is structurally in a bull run, but what happened was actually very interesting. Till I would say August of last year, on a year-on-year basis, silver had clocked a return of around 50-odd%. From August onwards, it went vertical, and especially from November onwards, just within 2 months, it clocked a 3x return. 3x. Even a Bitcoin doesn't do that. Right? So what really happened was that from October, a lot of these FOMO crowds with a lot of leveraged money who got stuck in crypto, and then the AI stocks were flatlining, they rotated heavily from December on into silver because it was the hottest thing. So they went in, all guns blazing. It was like an all-in, all-out. So that's what we saw. So the number of $120 per ounce, right? So if we ignore that noise, silver has been steadily going up. So the structural story is intact, and this is the time for the investor to get in, accumulate through ETFs or through the physical means, and sit tight and sit quietly for the next 2 years.
So that's the very near-term outlook on silver, but a very interesting word you used was FOMO. And I want to build upon that. Talk to us about the outlook on where prices are going and what one should do, given that this is a dip we've seen and FOMO in the market is quite high. For people who've missed out on the silver rally, would now be a good time to enter. And for those who already hold, would now be a good time to add and average out the portfolio.
Thank you very much. Sneh, and thank you, ET Now, for inviting me on this show. I would say that what Anand just said is absolutely right. We had a lot of FOMO developing. I think that's been burst now. And that's been burst for a simple reason, the way the markets have behaved in last 2 or 3 days. I would say on the 29th of January, the silver prices were hovering at around the all-time highs of around $121. In Indian markets, we saw the prices going to an extent of around 4,20,000 per kg. And in just 2 days' time, the markets are back to the normal to an extent of around $225, 225 lakhs per a kg, and approximately $73 levels in the international markets. The question is pretty much right, whether we should get into the market as this particular moment stands or not. I would always say that both gold and silver, and as Anand rightly pointed out, silver performs both bullion and the industrial metal function. 60%, or to be precise, 56% of the metal now is consumed for industrial purposes.
And the new technologies like AI semiconductors, the structural deficit, the demand coming in from the EV, all those things definitely look positive going forward. There is a structural deficit. We saw 226 million ounces of structural supply crunch in the year 2022 calendar year. And that is continuing. 5 years, the last 5 calendar years have been the deficit situation for silver, and the demand is going up like anything, be it electricity, the EV, be it the semiconductors, be it the energy resources for driving the AI servers, and anyway, the normal industrial demand. So I think the outlook remains positive. We should go in for a staggered way of investment. And I would say both gold and silver, not just the silver, both gold and silver, now since you have ETFs in silver too, should form a part of a corpus or a portfolio of any individual who wants to part this particular money in the financial markets. So I would say that a staggered way of investing would be the best thing to do through ETFs for a retail investor. As of this particular moment, there are a couple of ETFs, Nippon EP ETF, and the AUMs of the ETF have grown from around 10,000 crores to approximately 70,000 crores on silver ETF over the last few months. So I would say that the staggered way of building up the portfolio with silver, and around 4 to 5% of the total, I would say, the corpus should be invested at all times in silver, and around 10 to 12% of the corpus in gold at all the times.
Okay, Mr. Mathur, thanks for that take. And you've listed out a lot of use cases for silver. So like we understand, silver is such a diverse metal and is used in a lot of places. My question to you, sir, now is, let's talk about the supply of silver, because the demand-supply mismatch could create the kind of price hike that we've seen. Now, all the way back in 1980 and also in 2011, when we saw such sharp rallies coming in, we had cuts that followed soon after, but this is a rally that looks like it's here to stay. Given that there are so many use cases for silver now with EVs, with electrification, with semiconductors now being a theme that was not something back in 2011, do you believe fundamentally we should not be giving a lot of, or not be paying a lot of attention to this sharp fall that we've seen and keep in mind the broader picture? Would that be the correct way to now start approaching silver investments for people who've missed out?
First of all, thank you for inviting me on ET Now. See, we are surrounded by silver. Whether you say EVs, or you say computers, or you say mobile phones, or switches, the demand for silver will continue to rise in the coming future. We saw a sharp up move. That was like, as he already said, like there was a FOMO. Like, a lot of people started investing, oh, we are going to miss this rally. So we saw a sudden rise in the prices. There was a good rise before because of the industrial demand. We were seeing a deficit in the market. Later on, it started correcting. That's because the margins have increased across the major exchanges, and it started correcting. Your question is this a right time to invest? I think so. It is better to be cautious right now. Wait for some time. Let this chaos settle down. See, the silver is termed as a gold with steroid, which actually we saw which has happened. So I think so, wait for some time, let it correct a bit, or let it stabilize, the volatility to stabilize. Then one can invest in a smaller manner, put money like in a bit-to-bit basis, not in the lump sum amount, and keep on investing for a long-term perspective, because it has a brighter future, you can say, because the silver has got a good, it's not easy to replace silver, frankly.
Okay, so that's the take. Mr. Banerjee, want your view on gold. Let's pivot the conversation away from silver for a bit, talk about gold. Now, very interestingly, some of the richest Indians right now are the Indian housewives. Given the amount of gold that they've got stashed away in their cupboards or in their lockers, most of it is not in an ETF investment form or gold bonds, or there are so many other ways that one could be looking at a gold investment. Given that there has been a moderation here to a significant pullback in prices, what according to you would be a good way to start dipping your toes once again into the gold market? And if at all, now is a good time to do that.
Right. See, whenever the gold prices have fallen by 20% or plus, that is the time for the investors to get in. And see, here the issue happens is that we have to moderate our expectations. This whole FOMO rally, all that has done has creating an anchoring bias. That is 5,600 for gold. Actually, gold has not corrected much. For silver, $121. Just imagine you went on a holiday for 3 months and you are back. Just invest like that. Nothing has changed. So gold, as I said, I started by saying de-dollarization and de-globalization. I just mention a bit because without explaining de-dollarization, there is no thesis for doing long-term investment for gold. See, de-dollarization is a process which began in 2008. Now it is achieving escape velocity, whereby in a few years' time, dollar will become a normal currency. Yeah, it might come as a shock to all of you, but if you connect all the dots, all the things that are happening, the fracturing of the world order, as Mark Carney said in Davos, we are not transforming, it is fracturing, right? So basically, the same thing happened with pound 90, 100 years back. Every 80 to 100 years, the business model of the world has to be changed. Like, take any industry. Whenever you face a challenge with the existing business model, you don't just shut operation. You always move to a new model. It takes time, but it happens. So it's 18 years running in I think the way the central banks have accumulated the gold, they have in there as a store of value, as far as the dollar is concerned, they have more or less de-dollarized it because now the gold share of their FX reserve is now is more than the US treasuries. Now what is left is the unit of, actually the medium of transaction. And the rails are getting placed, be it connecting the electronic payment networks, be it RBI talking about connecting the CBDCs and doing these bilateral deals. Once you just connect all those dots, it won't take much time for the countries to switch to trading in bilateral currencies, just like Thanos, one snap, and the entire global trade can shift in a very short time. So gold sits right at that point, and gold has, in fact, beaten the financial assets over a very long period of time, 20 years, 30 years. If we compare any index in the world, even S&P, gold has outperformed. It just shows the amount of currency debasement which has happened, which has basically inflated all assets, created an illusion of wealth, right? So gold should be a part of one's portfolio, and Indian women are the smartest in the world, which even Mr. Uday Kotak said some time back. So yes, this is an opportunity to buy gold, but not with leverage. Actually, one should control greed and buy in ETF or in metal form.
Okay, so that's the outlook on how you can start adding to your gold portfolio or a fresh investment if this is something that you don't already have. Mr. Mathur talked to us about the governor's speech just this morning. Precious metals is something that he mentioned multiple times in his speech today, something that we've never in the recent past at least seen in any of the governor's speeches. And he also went to the extent of saying that in the inflation target has been hiked, given the kind of run-up that these precious metals have seen by 60 to 70 bips, the inflation could go higher is something he said. At a time like this, would it still be safe enough to call these assets safe haven assets, given that our outlook is being hiked on the back of this?
I would differentiate between gold and silver in that regard. The silver is a very dynamic commodity. It works both as an industrial metal, as I said earlier, and it as a bullion too. So I will not keep silver as a safe haven kind of commodity, but gold definitely is a safe haven without doubt. To the recent memories of 2008, 2009, I'm not talking about 1979, when the inflation in the US touched double digits of around 23% or so. So whatever we have seen over the last couple of days is those 40 years, the one-day falls on the 1st and the 2nd of February, just a few days back. I would say gold is still a better one to be parting with as a portfolio, as a real safe haven asset. Now, even if the silver is down today, the gold is coming to the senses to a level where now it is trying to pull back on the rally. We did saw the prices touched all-time high of around $5,600 per troy ounce. In the US markets and Indian markets, we did touch. On the futures, the April futures touched around 1,91,000 per 10 grams, and the neo month, February at that time, touched a high of around 180,000 per 10 grams. So I would say that the gold is definitely an asset as a safe haven asset. We have seen it in 2008, 2009. We did saw it coming in Eurozone crisis in 2010, and then again the COVID time. So 25, the calendar year, we did had 83 highs between 24 and 25. So 2 years, 83 high, once in a week, every time the gold has touched an all-time high. So I would say that the senses are prevailing now. The dollar weakness, which was giving a bounce on the gold prices, is somehow now not catching up. The dollar is appreciating. So it did touch a low of around 95.55 few days back. And currently we are seeing dollar in the range of around 97, the dollar index. And I would say that the dollar, the geopolitics, the economics, everything, including the Venezuela, the Iran, everything, including the inflationary part. And the precious metal talk is definitely on the hit list because of the returns and the fall which we have seen over the last couple of months. So I would say gold would be better as a safe haven asset because it works really well and it reduces your risk-adjusted returns to a large extent. So even the CME study some time back has showcased that if you have gold around 12 to 15% in your portfolio, your risk-adjusted returns are much, much better than only having just the risk assets which are equity or bonds as fixed income. So I would say around 40 to 50% should be on the equity side, 35% should be on the fixed income bond side, and 10 to 15% in times of these sorts, which helps to minimize your losses on the risk assets. So gold would be the best thing to have as a safe haven. Thank
Very
you.
interesting take and very interesting number of highs that gold reached also. Yes, we saw it a lot of times, but thank you for putting a number to that. So weigh in with your view over here. A lot of times when we talk about precious metals, earlier it was gold, then you had silver that's made it a part of that list because of the kind of rally we've seen. One metal we've not spoken about, despite it seeing an 85% surge in the last 1 year, is platinum. Nobody is talking about the kind of move that we've seen in platinum. And there are not a lot of ways to invest in an asset like that. How does one participate in a rally like this? Would it still be a rational part of the portfolio? Would it be a good investment to make along with something like, say, a gold and a silver mix in the portfolio?
Yeah. It is better to have gold and silver, but I would say maximum amount should be in gold. See, the reason behind is if you are looking for a hedge against any uncertainty, thanks to Donald Trump, we have uncertainty every day. We wake up in the morning, oh, there's an attack or something's happening, like, you know. So there is a lot of geopolitical tension happening in the world right now, whether it is Iran, Venezuela, you take Middle East is in crisis, trade wars are going on still. So the gold is a friend for, like, you know, it's going to protect us from uncertainty. So during such kind of time, gold is a better option. Second thing, as Anand has already spoken, like, you know, the central banks are continuously buying the gold, and they have continuously buying almost 1,000 tons of gold since 2022. But maybe this year they have, the pace of the buying has reduced by around 867 if I'm not wrong. But still, they are much above the average compared to 2001 to 2010. And seems like they're going to continue because everybody is scared. Like maybe the Donald Trump may like put sanctions. So what are they going to do with the dollars, like, you know? And even if we see it, the gold has become the second largest reserve right now. So overall, fundamentally, structurally, the gold looks very positive in the long-term perspective. And one should have gold in their portfolio, like as Naveen sir has already said, like 10 to 15% is a good an option to have gold. So yeah, both gold and silver is a good option, but silver may have like a risk of uncertainty because it is a industrial metal. So if the economy is not doing well and the demand for electronics or the EVs or the PVs goes down, so there's some impact which would we see on the silver, not on the gold. So yes, you can have both, but more towards gold.
Okay. Mr. Banerjee, want to talk to you about what lies ahead. Two factors that drove the rally we saw in precious metals was one, the tariff uncertainty. Now there is certainty about our trade deal with the US. Also with that, a lot of other countries have already inked their trade deals with the US. Second was the uncertainty of who is going to be the next Fed chair. We now have clarity on that too. And third, in fact, was the central bank buying action that you've said. We've seen a lot of central banks globally, especially China, lapping up as much of the precious metals as they could. Now with all these three factors behind us, how much of an impact or an influence rather are these going to have on prices going ahead? And let's say in the near to medium term, where are prices for gold and silver headed?
Yeah. See, if you look at the gold demand, I would split it into three pillars. First is consumption, the jewelry which we wear. So let's ignore that for a moment because that is price sensitive. What has been driving the gold price are two factors, the diversification pillar and the speculative pillar. We have seen the impact of the speculative pillar, we talked about it. Now, there are two kinds of players in the diversification pillar. Central banks, they are trying to diversify or swap their dollars into gold. See, gold is just the currency. Just imagine a monetary hierarchy. Gold is the founder and the dollar is the CEO, right? So when you have to change the CEO, you have to go to the founder. It's kind of that to understand it. So they have been swapping it is what you are saying, 800 tons, 1,000 tons. But the Chinese central bank has been acquiring gold through unofficial channels, right? So in fact, I think a couple of Western brokers had come out with a report on that, and that's substantial. Now, what is going to be the driver going forward are two. One are the private institutions. If you look at the allocation to gold from the Western financial institutions, the citizens, it's pretty low. They are loaded in financial assets and in cryptos. And that money will move because the Asian individuals, Asian central banks, Asian institutions are heavily invested in gold, and we are seeing the positive impact of that. But with time, we will see a lot of money of Western citizens rotate to gold as they realize that the path forward for America is only currency debasement, because they face an economy which is clearly a K-shaped economy where top 10% is doing fine, the rest 90% is actually sinking. So, and Trump faces an election risk in November, and he has made it amply clear he's going to print money, both from the fiscal as well as from the monetary means. So the path is clear that these will continue to drive gold prices, but from time to time we will get the speculative push, and then we will see a sudden jump in the gold prices. But the overall trend is up. We won't be surprised to see gold at $6,000 in 2026 or even above that.
Okay, so we have less than a minute left. Very quick rapid fire style. The whole crux of this conversation was buy the dip or wait. If you had to give a one-word answer, Mr. Mathur, what would it be?
Yeah, Sneh, I would say that buy on dips in a staggered way. But just to add a little number, sure. I know we have 30 seconds only on this. The global ETF buying would be very strong this year too. So in 2025, the global ETF buying was approximately at around $559 billion. I'm talking about the AUM. Sure. So that's what 2025 we ended with. And 2021, and I'm talking about 2021 number, that was $110 billion. And 2025, when we started off with the year, it was $306 billion. So the ETF buying, as Saif said, the central bank buying would be very, very strong for gold particularly, and therefore between the two, gold and silver, as I said earlier, gold would be a very, very good bet to be part of the portfolio. Thank you very much.
Mr. Mukaddam, one word answer, buy on dips or wait?
Definitely buy on dips.
Buy right now or wait?
I think so. You should wait for chaos to settle right now. There's too much of noise.
Okay.
So let's it settle. Then you can continue buy on dips and continue buying in short, like in staggered way, not in the lump sum amount.
Okay, Mr. Banerjee, buy now or wait?
Buy now and buy more if it dips.
Okay, with that, we'll wrap up this panel on what to do when it comes to precious commodities and precious metals. Hope everyone sitting here has got their answer. Gentlemen, thank you so much for your time, and thanks so much for joining us. Thank you.
Thank you so much, gentlemen, for those wonderful insights, and thank you, Snehi, for the panel discussion. Snehi, may we request you to present the speakers with a token of our appreciation?
Let's keep the applause going, ladies and gentlemen. They've given some great insights. So if we're discussing to buy or sell or buy or hold or what do we do?
Yes, and precious metals have, kept us wondering for the past couple of months, in fact, Sumit, isn't it?
Absolutely, the past. And in fact, more than the month, last year, and everybody's been talking about it. I know my mom's friends are like kind of upset because they're like, now we have to remove the gold from our cupboards and check kitna jewelry, kitna sona hamare paas hai, aur sab husbands ko pata chal jayega. I know.
Bilkul. But, like in Marathi we say locker-chi shobha. Like, the gold jewelry lies in the locker, it seems, and now more so, considering the kind of money that we are paying for gold.
Absolutely.
So before we move on, on our next chat, a quick thank you to all of our partners today. Presenting partner, SBI, co-powered by Adani Ambuja Cement, HDFC Life, associate partner Latin, Manharlal, crypto partner, Coin DCX, housing finance partner, LIC HFL, timekeeping partner, Just in Time, healthcare partner, Zota Healthcare Limited.
And ladies and gentlemen, if you've been taking notes on all that our experts have been saying and the advice that they've been giving, you can share that on social media. Use the hashtags India Investment Summit, and you can also use the hashtag IIS2026. Now, Shibani, let's move on to a very interesting session as well. Now, the Indian tax and regulatory system is a multi-tiered, complex structure that is currently undergoing significant modernization so that it can improve the ease of doing business and enhance compliance. Very important, very much needed by corporate India. Now, at the same time, tax considerations in mergers and acquisitions play a crucial role in shaping deal structures, mitigating the risks, and ensuring regulatory alignment. So how do we do this evolving tax and regulatory dynamics? How do we understand that? How does it influence investment decisions in India's growth story? To help us understand this, I'd like to invite up on stage Mr. Anil Talreja, his partner at Deloitte India, to share his perspective.
Good evening, ladies and gentlemen. After hearing the buy and the sell, the one thing that I must only say and advise is you can't escape from paying taxes. Again, talking about taxes, and particularly on a Friday evening, I know it's not that easy, but please remember that most of the tax professionals, including me, were working on the Sunday, where the finance minister kind of ensured that all of us were on our toes. What I'm going to do in the next few minutes is just talk to you about some of the bold moves that have been announced in the budget. And the reason I use the word bold moves is because just before the budget was, to be presented, we normally have a usual round robin in terms of expectations from the budget. And many people had, given the geo-economic tension and the political situation, had kind of put their fingers crossed to kind of worry whether is there going to be new amount of taxes that are going to be levied, or is there going to be a boost that will be given to the economy. Now, I'm not going to get into the technicalities of tax, but what I'm going to do is just talk to you about some of the important proposals, and these are directly linked to a common man speaking when you talk about investment in India. What you see here is exactly what I believe has been followed by our government. So much that we had expected that there will be kind of perhaps a move to increase taxes, given that the situation economically and globally is not very stable. I think the finance minister and the government have done a wonderful job, and to a great extent, I would kind of recommend that. I would reckon that when you look at bold moves, this is one of the best bold budgets that we've ever seen. And the reason why I say that, there are a lot of undercurrents in this budget which have not been kind of highlighted to the extent one would kind of look at. You know, the budget speech about an hour, the budget document a few hundred pages, but there are certain nuances which come our way. Remember, in the last 2 weeks, the budget has just been one of those intermediary important policy announcements. We all recognize and witness the signing of 2 important trade agreements. The EU trade agreement, which got signed on the 27th of January, and we had the US FTA that got signed. The reason I bring this up is because any trade agreement has the requirement of doing trade, this is buying and selling of goods. Now, the reason I want to kind of emphasize, and I'd seek your attention, is that when you look at FTA that India has signed with, for example, the US, now to a great extent that will bring in the demand factor. So once the FTA gets operationalized, which we expect will happen in the next few months, there is going to be a demand for goods. Now, whilst the demand kind of is secured in the form of the FTAs, and by the way, US is just one of the 13 FTAs that India has signed, you also have to worry about the supply factor. The supply factor from India point of view is the whole Make in India, the whole manufacturing, the whole sourcing of goods from India. In the budget, the government has given some very unique, bold moves to encourage manufacturing and production in India. And that's the reason why the budget has very nicely been positioned between the 2 FTAs, where you have your supplies kind of side covered, and you have the budget which has laid out the platform, or I must say the springboard of the Indian manufacturer, the production houses, to go back and see, okay, this is where I could really increase production and I could bring in more efficiency. So the writing is on the wall as you read this. You have the supply side secured. You also have the manufacturing side secured. Now, how have you secured the manufacturing side? You know, we were doing a survey. The government, as you know, has announced a bunch of incentives in the last few years. These incentives, starting from the production-linked incentives, there are various other incentives. I won't get to the details. But our survey indicated that corporate India actually have not spent too much time in understanding these incentives and making use of these incentives. I don't know if you know if these incentives that the government has announced in the last 2 years, whether it's state incentives or federal, if the corporate India takes a proper use of it, many companies can actually get 25% of their capital cost waived off just because of using the incentives. So the fact of the matter is that people feel that it's perhaps more paperwork, compliance, and at the end of it, I won't get the benefit. These are not the tax holidays. These are incentives which are linked to your own manufacturing. And as I mentioned to you, when you have capital equipment coming into a factory, 25% of that cost, to that extent, you can really get the benefit. So using those incentives, and also a few incentives announced in the budget, I think is an important element to create the platform for manufacturing. Specific to the budget, the government has focused on a few sectors. So we heard about rare earths, perhaps for the first time. We heard about sectors like biopharma. We heard about semiconductor in this budget. All these are incentives given to these sectors. You know, in last year's budget, the finance minister had announced something called a state investment index. Every state has an investment index, and that is the reason why there is a very healthy competition amongst each of the states. And that's where you see invest in UP, invest in Orissa. These are the local kind of state-driven incentives that are given to the government. So what is it in particular that this budget had for boosting manufacturing and also boosting the larger ecosystem? You know, for the first time in the history of our country, we had a budget document which had the heading called Ease of Doing Business. It has never had this heading in the past. We always had direct taxes, indirect taxes, production, agriculture. We have a heading in this budget document which says Ease of Doing Business in India, which clearly indicates the intention of the government that they are pretty much backing, giving whatever is needed from their side. And I know there are challenges. Our country is not a small country. It's not going to be a big bang announcement. No budget is a big bang announcement. But the fact that you have ease of doing business as an intention of the government, that kind of comes out of this. The second, perhaps for the first time that I've seen, and I think all of us have seen, this budget has given a tax holiday for 21 years on one of the provisions. And that provision is with regard to data centers. So as we know that India houses about 20% of global data, but it has only 3% share in the data centers. What this budget has done, that it has kind of proposed that when foreign companies are investing in India, they're providing services in this space, the income that they earn from this space will be exempt from tax for the next 21 years, which is up to 2047. Now this is again a bold move, as I say. It's a punt. It's a very, very calculated punt that the government has taken, but it will certainly give a lot more opportunities to the Indian entrepreneur as well, and the whole ecosystem around it. What do you expect out of this announcement? I expect outside of Mumbai, outside of many of the larger cities, when you have the tier 2, tier 3 cities, there'll be zones that will get created. There'll be aero cities of sorts or SEZs of sorts. These will be owned by one large real estate player, and they will be giving units which will be hosting the data centers. This is what we expect as a result of this. And look, there's a 21-year holiday, so it's not going to be taken away in a year. So there is clear long-term thinking by the government, which I think deserves to be applauded. The second important point that I wanted to mention, which is also an important proposal, is more particularly in the equipment, in the consumer equipment manufacturing sector. And this again directly goes into the semiconductor space. What you see on the slide here is just a synopsis of the benefit, the contract toll manufacturing benefit that is being given again to foreign investors who are wanting to make investments. Now, one important point I'd like to make here, and that is, you'd wonder that these are kind of tax benefits given to foreign investors only. Well, this is one way by the government to ensure that there is sustainable investment in our country, and that's the whole purpose of this event as well. So by that, you have a win-win situation. How do you land up having a win-win? You have a foreign investor who's interested in investing in India, and now that he has the tax holiday, all the more reason he is interested. You have the Indian entrepreneur, which is the Indian entity, which also then prospers to an extent, and the whole ecosystem, which is inflation, employment generation, per capita income, all that kind of moves in the right direction. This is going to be an after effect, but it's not going to be seen in the next few months. Reflecting now back, the FTAs, the demand secured, and here you have the supply secured with the help of these incentives. That is where I was trying to say that there has been a very equitable balance that the finance minister has kind of put forward. Now it's on corporate India to take advantage of this. So we have, what do we expect to see in the next few months? On one hand, you will see a lot more conversations about the FTAs being operationalized. So for example, the EU FTA, they'll go to the EU Parliament and they'll get signed over there, approved. The US will have its own kind of route. it'll take about 8 to 10 months for these to be operationalized. By that time, these incentives will somewhere get digested in the Indian entrepreneur system, in the manufacturing companies that we have here in India, and they'll start putting, their plans as well as putting their initial capital investment. So in the next 1 year or after a year, when you have both these demand and supply secured, you can imagine the amount of efficiency and the productivity that will increase in the country. So this is on hardcore real sector, and with the help of ancillaries like the data centers as well as electronics manufacturing. This is a nuance. It's not coming out directly from the budget, but after doing the analysis of the budget, this is what we could derive. Now, in the next couple of slides, I'm just going to kind of give you some blips. I know a lot of material is already there in the last 1 week. You would have read, you would have understood, learned, listened. But I think a couple of important aspects that you see over here, some of these did cause some turbulence in the stock markets, for example, the STT, etc. The government is also inclined to simplify the tax law. We all recognized and witnessed that in the last few months, the government again has not only formalized, but also institutionalized the new Income Tax Act, which is the Income Tax Act 2025. The government has already announced that this will come into effect from 1st of April 26. Look at the speed at which all this is happening. The rules and the forms will all come out before 1st of April 26. The purpose of this law, A, simplicity, B, removing uncertainty, and 3, most importantly, trying to remove as much of multiple interpretations that one can get from a tax law. And the government has done a phenomenal job. I'll give you an example. This new act, the Income Tax Act, has 53 tables as part of the act, whereas the current Income Tax Act, which is a 1961 act, has about 20 tables. If you have information or law in a tabular format, you can imagine how clear it can be for someone to understand. Doesn't mean that we will not have litigation, but it is recognized. I think there is an intention to reduce the litigation in the tax world to a great extent. So some of these provisions, and as you see, simplification of the tax law, you also see decriminalization. The government is also kind of conscious of the fact that there are a lot of penalty provisions in the tax law. They've recrystallized those to be fees. So the idea is that they are really wanting to give whatever they can do, given the limitations that they have, to the Indian taxpayer to ensure that there is going to be more certainty and simplicity in the tax law. From the indirect tax side, yes, there has been some reduction in the customs duty rates. There has been some simplification. There is a single window announced. So there is a huge amount of smooth process streamlining in the times to come. There has been one important aspect that the government has touched upon, which is the working capital release. Now, a lot of money, taxes get stuck as part of working capital. So one of the things the government has done is to bring out measures whereby there'll be more working capital available to companies at large. Finally, I just want to mention on the personal tax side, there's nothing changing, but the one important aspect is reduction of the TCS on LRS, which is basically when you remit money outside of India for tourism, etc., or for education, there is a reduction of the rate. I mean, the idea is that, as you realize, the government's intentions are clear. There is no single additional tax levied in this budget. There are certain provisions on buyback, etc., which are important from a deal point of view. But overall, I think the budget is quite well accepted. Yes, perhaps more was expected from the government and the finance minister. But if you look at the challenges around us, I think it's a beautiful start, and I think we should acknowledge, appreciate it, as well as try and see how best we can, as a country, take full advantage of it. So that's what I thought I'll cover as part of the budget, given the theme of the conference. And thank you very much for your patience, and have a lovely evening.
Mr. Talreja, maybe request you to just be on the stage. So thank you, Mr. Talreja, for the distinct perspective. Now, Sumit, may I request you to present Mr. Talreja with a token of appreciation? Well, a huge round of applause, ladies and gentlemen, for Mr. Talreja. Thank you so much again, sir, for joining us today. Now, moving on, FDI inflows in India are expected to see a robust growth in 2026, supported by strong macroeconomic fundamentals, big-ticket investment announcements, and sustained effort to improve the ease of doing business and a new generation of investment-inked trade pacts.
Exactly, and to ensure India remains an attractive and investor-friendly destination, the government has been reviewing its FDI policy and engaging in extensive consultations with key stakeholders. Now, to help us navigate and to understand India's trade narrative, our next session is really important and it's going to be really interesting also, Shibani. I'd like to invite up the moderator first. We'd like to have Aisha Faridi back on stage, and she'll be in conversation with Mr. Mahesh Nandurkar. He's the head of India Research and the India Equity Strategist at Jefferies.
Thanks, Shibani and Sumit. Well, we've heard so much talk about where to invest, how to invest, and I thought who better than Mahesh Nandurkar to tell us. And the debate is really not about what in equities, it's now about which asset class, gold and silver. And that's really confusing just about every investor right now. There's so much FOMO feeling as well, Mahesh, out there about, whether or not you can still make money, and that kind of money that all through you made in 2025 in gold and silver. I know I'm deviating from what we were supposed to discuss, but I have to get your thoughts on this.
First of all, thank you, Aisha, for inviting me for this program. Well, yeah, so I think what the year 2025 did, or basically the last 15 months or so, I think just taught us the importance of the asset class diversification. The prior 3 or 4 years, or maybe 5 years, it was just one-way street. It was just one asset class that mattered, which was obviously the equities. But I think we just learned the importance of diversification. And I think the diversification should be viewed not just in the context of equities versus debt versus commodities, but also access to the international capital markets as well. And thankfully, now we are sitting here in India, we have access to a variety of international capital market access products as well, offered by various mutual funds. And now we are seeing the GIFT City also is being made operational to that extent. So yeah, I think it makes sense. And it's was always known, it was always talked about, but I think people just forgot about the asset diversification in the previous 4 years. I think we are reminded of that once again.
Okay, interesting. So let me take it to a week back, the Budget Sunday, firstly, Mahesh, and wanted your takeaways on whether or not, while budget is losing its significance over the years, and the government, to be fair, has done lots outside the budget in the year ahead already. But would you say that there was any drawdown or any takeaway that investors per se of equity markets or inequity markets could take from the budget this time?
No, I think what you're saying makes perfect sense, that in the overall scheme of things, and given the fact that budget is just one of the platforms that the government has to announce various reforms, various policy measures, and that's not the only one. So to that extent, I think we have seen some reduction in the investor anxiety around the budget time, and rightfully so, because obviously now we've got the GST implementation. There is a much more clarity on the indirect taxation. I mean, I remember like 10 years ago and 20 years ago, people would sit down with a pen and paper, and we would get a big list of the excise duties on a whole bunch of products and commodities.
What becomes more expensive and what gets cheaper.
Exactly,
Yeah.
exactly. And thankfully with the GST implementation, that part is literally out, of the equation. And it's good that it is out of the equation. I mean, a country like India with GDP of like $4 trillion and growing strongly, we don't need this hanging sword every year that, okay, what's going to happen to my taxation on this product versus that product. So I think it's in a way, I would say, a welcome thing that the budget has become a less of an event in terms of the changes in taxation, etc. goes. But yeah, but just to look at what we saw this Sunday or the last Sunday, I think it was a very, very pragmatic approach from the government. From my perspective, the simple takeaway was that over the last, say, 3-4 years, the government has been reducing the fiscal deficit at a rate of around 40 to 50 basis points per year. And this time, they have reduced the pace of fiscal consolidation to about 10 basis points per year. So from 4.4 of this year, targeting to 4.3% the year after. And that's a welcome change because at this point in time, we are going through a period of low nominal GDP growth, low inflation. And so to that extent, the government does have that flexibility to not focus so much on inflation and be a little bit more relaxed on fiscal. But having said that, they have cut the fiscal deficit target. So I think it's a welcome sort of change in the trajectory as such, although it means that in the subsequent year, there will be a tighter fiscal deficit reduction because they've already announced the March 31st debt to GDP ratio as the target. But yeah, so for now, I think that's one positive clearly from the budget. And the good news is that this incremental fiscal flexibility that the government has, they have basically used it to fund incremental capex than the other way around. So we have seen incremental budget allocation for roads capex, railways, and defense capex. So I think all that is in a good stead. I think the market reaction on the negative side was probably emanating from the fact that there was certain quarters of the market that were expecting some kind of a relaxation on the capital gains taxation. That did not come through, obviously, and we saw some incremental taxation coming in the form of STT. But I think in the overall scheme of things, it was a nice and pragmatic budget. The government rightfully focused on promoting exports, and we saw, as the previous speaker also highlighted, variety of ease of doing business related initiatives and the 21-year tax holiday for the data centers and the related activities. So I think it was a very finely balanced budget in my view.
Mahesh, budgets will come and go, STT hikes will come and go, all of it will happen. But eventually for an investor, it's going to boil down to earnings because that's what the market will value. You've always believed that right now as we see it, given that macros are in a good shape, earnings will provide a cushion to valuations. How do you see the earnings trajectory pan out from here onwards?
No, that's a great question, Aisha, because ultimately we, an average investor goes more by the market sentiments and doesn't focus as much on the PE multiples and the earnings growth. But that's what ultimately is the driver for the markets. And I would say that this year, like FY26, we have seen the corporate earnings growth has been relatively on the weaker side. We are seeing about 7 to 8% corporate EPS growth in FY26. And my sense is that the depressed level of EPS growth this year is attributable to various factors, which according to me are going to be reversing next year. So we are clearly looking at a much stronger, about 12-13%, 13 to 14% EPS growth next year. And we believe that it is going to be driven by one, first of all, as I mentioned, the nominal GDP growth has been low this year, the inflation has been low this year. And as the RBI governor also said in the morning, the expectation is that the next year, FY27, inflation is going to be well over 4%. So that itself is going to increase the level of growth in the nominal terms. And while, one might think that, okay, inflation-driven EPS growth, what kind of an argument is this? But see, ultimately, do we ever talk about what is real corporate EPS growth? We never talk about that. Do we talk about what is your real wage growth? We don't talk about that. We always talk about, okay, did your salary go up by 10% or 5% or 20%?
Cash in hand, basically.
Cash
That's
in
what
hand.
matters.
Cash in hand,
Yeah.
exactly. So I think that is definitely going to be one reason. Second reason I would say is that the rate cut cycle has come towards an end. And the the fact that we saw 125 basis point rate cut by the RBI over the last 12 months has had a big negative impact on the banking sector earnings growth as the net interest margin goes down. So from that perspective, the outlook for such a large part of the market, almost 25% of the market is banks, right? So they see the positive momentum coming through because of that. And the third factor is monsoons, in the sense that last year, as in like FY26, we had like super normal monsoon and an extended one at that. And while one would argue that the impact of excess monsoon or good monsoon is good on the Indian economy, that is correct, that really helps our farm incomes and rural incomes. But the way the economy is reflected in the stock market, which is by way of which companies are listed on the stock market side, the corporate EPS actually gets negatively impacted, because the number of sectors, be it like power demand, which is linked to monsoons, then construction activity, cement production, steel production, and you've got the soft sort of drink sort of consumption goes down, the aircon demand goes down, etc., which has a much greater representation in stock markets today than before. And secondly, in the earlier, let's say like 10 years or so ago, the rising rural incomes who were well captured in the markets by way of the consumer staple sector, now that has become a much smaller part of the index. And secondly, I think many of these companies, they haven't really kept pace with the changing consumer preferences, even in rural India. So, you know, if the income levels for an average consumer in rural area goes up, they don't necessarily end up buying more soaps or shampoos or hair oil, etc. Even, you know, they buy like, you know, one more shirt or one more shoe, or maybe buy a bigger data packet, or maybe, you know, go to a parlor and things like that. So in many ways, the impact of very good monsoon on rising rural income is not captured by the markets. So I think that also reverses probably next year, assuming a normal monsoon. Although some of the initial weather forecasters are talking about El Nino conditions building up, which probably means that it's not going to be a normal monsoon, but maybe a below normal monsoon, which once again might be not so good news for the rural incomes, etc., but will be a good news for the corporate EPS growth. So yeah, so I'm quite optimistic on the corporate EPS growth improving materially next year.
But you know, the point that you were making, that a large part of the market is not reflecting what's happening really on ground. But tell me, if I were to just, you know, take the fisheye lens right now, and if I were to just look at the $22 billion of outflows that we've had from the FPIs and the FIs, and they continue to sell India at a time when India is not cheap, per se. What is that telling you, and what will make them return to India?
So this is, you know, a question that, you know, all of us are debating quite a lot, because that seems to be one of the key driving factors for the market. I think so. Unlike the domestic investors, obviously the foreign investors have multiple choices and multiple options, right? And what has changed in the last 12 months to sort of 18 months is this massive investment theme which has been playing out globally, which is the AI, right? And what we're seeing is that even in the Asian context, and while one might say that most of the AI companies are based in the US, but even in the Asian context, the markets and the economies like Taiwan and Korea are hugely plugged into this AI economy, right? By way of the chips, you know, and the memory. And I think, you know, if you look at the earnings growth offered by the other markets like Korea and Taiwan, it's like fantastic. So in fact, if you just, you know, if I just give you like like 2-3 data points, Indian corporate EPS growth used to be at about 7 to 8 percentage point premium to the other Asian markets, if you look at last 10-year averages. What it has been in the last 2 years, rather than +8, it has been -7 or 8. And the projection also for the next couple of years is also similar, because you know, if you look at like one data point, like, you know, what is happening to the memory prices, they've gone up 4 times, which is hugely helping the economies and the companies in Korea and Taiwan, etc. So net conclusion is that, so as the point that you rightly mentioned, that India is still about 40 to 50% premium to the other regional markets. And while in the earlier period, that premium was very well justified because Indian EPS growth was much sharper than the rest of the region, but that's not the case right now. I mean, obviously, some part of this change is more cyclical once again, because it is to do with what is happening in the AI and the AI-related investment cycle, which is not going to remain as strong as it has been. But for now, clearly, the value versus growth equation looks much better for some of the other regional markets, and that's why the foreign investors have done what they've done. And my sense is that unless this AI frenzy cools down a little bit, difficult to see why the foreign investors will rush into Indian markets in a hurry.
So Mahesh, your base case Nifty target is still suggesting modest upside. I'm wondering what's the swing factor, and would it be a trade-in, trade-out from the FIIs where the anti-AI trade will play out and then you think India will emerge?
Yeah, so my sense is that if you, an average Indian investor also needs to focus on what is really happening in the AI world and what is really happening with the big names like the Googles and Meta and so on. And at some point in time, the global investors will begin to question the huge investments that is going into AI right now. I mean, just last week, Google actually upped its annual capex guidance from $120 billion to $180 billion in 1 year. So at some point in time, the global investors will begin to question that, okay, you are spending $200 billion. Is it really driving enough returns? And at that point in time, I would say there will be some change in the preferences of a typical foreign investor. And yeah, my sense is that it's still going to take some time, but I'm quite sure that this change in the thinking of the global investors will happen sooner rather than later. So second half of the current calendar year should probably look much better, for India. But maybe for the next 1 to 2 quarters, we'll probably have to just contend with maybe just a sideways market movement, I guess.
The other thing I also wanted to talk about, Mahesh, was as you look back for the year, there was so much which was happening in the primary market. DIIs were putting in money in the markets in any case. Is it really fair to judge the market not doing anything? Because major part of the flows were going into outside the secondary market.
Yeah. Absolutely. So I think equity supply has been very strong, as you rightly mentioned. And we have seen equity supply of all types, right? I mean, it's not just the new companies coming up and listing in the form of IPOs, but also the existing companies doing a follow-on offerings and QIPs. But also equally, we have seen large private equity sort of exits. We've seen some promoter exits as well. And when I mean promoters, it's not just the domestic promoters. We have to look at the foreign promoters and the names like the BATs, the LGs, the Hyundais, and so on. So all of those put together, we have seen equity supply has been in the range of almost like $5 to $6 billion a month. So while we talk a lot about the SIP inflows and the stability of mutual fund flows, and now the insurance and the NPS and EPFO and everything is adding to the domestic flows, but a large part of that has just been going out of the market by way of all this equity supply. I think at least in the visible future, that supply is going to continue, in my view. So it's not that it will go on forever, but at least over the next 12 months or so, from whatever that I can see from our interaction with the corporate sector and so on, I do see that equity supply to remain quite strong. And so to that extent, the large domestic inflows that we've been seeing, will probably get absorbed in this equity supply, and therefore may not necessarily result in the markets moving up in a material way.
So since you are predicting another 2 quarters of a sideways movement for the market, what will be that big kicker? And will eventually everything boil down to earnings, because markets are a slave to earnings? And if so, where is it that you see the next profit pools getting created?
No, so you are absolutely right. Ultimately, we have to follow the earnings, and the sentiments and the PE rating can do only so much. And we've seen a lot of PE rating, by the way, over the last 5 years. So yeah, so my sense is that as the market begins to see more confidence in the EPS growth improvement story, as I said, like last year or FY26 has not been a great year. FY27, as we move into like quarter 1, quarter 2, we should be looking at numbers moving up closer to like 13 to 15% and maybe more. I think that's when we will probably begin to see the markets reacting. From the which segments would be driving incremental earnings growth. So my sense is, as I mentioned, one is definitely banks. So overall the NBFC sector, but banks should kind of dominate the part of earnings growth improvement story. I would say the other somewhat neglected sectors like even I would say like real estate, power utilities, I would say names like cement, which are not very large part of the market, but many of these stocks have corrected in a significant manner and in a manner that probably tells you that the market investors are not really expecting much out of these sectors. So even a small positive surprise can actually be quite, can be sort of taken quite positively by the stock prices in these sectors. So yeah, so among the so-called neglected sectors, I would say, my picks will be like cement, power utilities, real estate, among the neglected sectors.
And what's a good AI trade? And is the route via data centers?
Yeah, so as far as India is concerned, at this point in time, we seem to be participating in this whole AI chain in that data center mode somewhat, although not in a very big way. In fact, the way one should be looking at the AI, if you look at the sort of various verticals or sort of various segments, one can easily classify into 5 different segments. One, the base layer, is probably the energy or the power utilities. The second is the chips manufacturing. The third is the cloud servicing and the data centers. The fourth is what we call as the large language models and what we typically call as AI, in layman's word, LLMs. And the fifth and the final was the application layer. Now, at this point in time, India is not really playing too much from the listed companies' perspective in these 5 segments, apart from the data centers, as you rightly mentioned. But again, if you look at, there are a couple of like small companies, but if you look at some of the large companies, the contribution coming in from the data center business or cloud servicing business at this point in time is very limited at this point in time. So that's why many foreign investors look at India as being at the receiving end of the AI, and that's why what we discussed in the beginning.
My out of syllabus question, but active investing or passive investing, what will work in 2026?
I think India is a solid bottom-up market, in my view. It was so last year. I think it will be like that this year as well. So my sense is that the importance of picking up the right stocks and the right sector is going to be paramount. And in fact, actually, even if you look at the last, say, like even 3 to 5 years, and even when the markets were actually doing pretty well, our analysis shows that active funds, in India have actually delivered better returns than passive funds. Because as I mentioned, India is actually a very strong, a market with like very strong sort of bottom-up ideas, and themes work out quite well. And I think in a year like this, like CY26, which I think is more like a sideways kind of a market, I think it is going to be a great news for the fund managers who believe in bottom-up stock idea picking. And in that context, I definitely believe that active fund management or active funds should deliver better returns than the passives.
More trade in, trade out kind of stories or long haul stories?
I think the next 12 months will probably a trading market in my view, because as I said, the overall direction is going to be like flattish. So there will be certain times in which certain ideas and certain stocks might do well, but then might not do so well, maybe after a quarter or two. So it makes sense to keep, an eye on that and then trade in or trade out as the case might be.
I have to ask you about Saspocalypse. Took me, of course, long to practice how to pronounce it. But is the IT trade-in over?
Okay, that's a very strong question. I won't say it's over because, ultimately, software and, IT services is definitely going to be, a significant part of even that, as I said, the top layer, the application layer, right? So that is still going to be there. But my sense is that the development that we've seen globally in AI has definitely, dented the significance, of some of, these IT services business model, unless those are, reinvented, pretty quickly. So, yeah, so my sense is that, like IT services is like therefore, a sector which is underweight, in our portfolio. Because, what we believe is that it's a sector that is probably not going to deliver earnings growth in double digits. It's going to be a single digit, earnings growth story. So, in that context, I mean, there could be some near-term rallies that some of, these stocks might see or the sector might see due to some positioning related issues that, okay, everybody's underweight and then some positive news comes and then the stocks move up. But if you look at from a 12-month view or a 24-month view, I will be underweight on IT services, yeah.
Mahesh Nandurkar, thank you so much. So much food for thought today in the conversation. Pleasure speaking with you.
Thank you very much, Aisha. Thanks a lot.
Thanks.
Well, thank you so much, Mr. Nandurkar, for some of those striking insights, and especially the last word on IT. Well, I would request Aisha to present a token of appreciation to Mr. Nandurkar. And a huge round of applause, ladies and gentlemen. Some more energy in the room.
You can clap louder than that, ladies and gentlemen. It's Friday evening, and our next session, while this one was very important and gave a lot of insights on the equity strategy, our next session is totally about tomorrow's multi-baggers, Shivani.
Indeed, identifying tomorrow's multi-baggers requires a deep understanding of business management quality, long-term trends. It's an approach that goes beyond short-term market noise.
And to share his timeless investing wisdom, and hopefully, I hope Aisha is able to get him to name some of those multi-baggers that we can all make notes of. I'm delighted to invite up on stage Mr. Vijay Kedia. He's an eminent private investor. You've seen him so often on ET Now. Huge round of applause for Mr. Kedia for his fireside chat with Aisha Faridi.
Ladies and gentlemen, a huge round of applause, please, for Vijay Kedia. We were debating about what to talk to him about, and we've talked so much about gold, silver, news flow, war, Trump. And we thought we'll ask you, how is it that you tune off from all that noise, and how do you invest and make money in this market? Take my mic, I'll get it.
Yeah, it's okay. No, it's okay. Yeah. So it's very simple, Aisha. As you know, in the stock market, there are two kind of animals, you can call it. One is like trader and one is like investor. So all this noise, what you're talking about, this is only for the traders and all. So for investors, all this news actually does not matter. For them, the only thing which matters is earnings. And earning does not come on everyday basis. So every day you have to face, or you have to, you get all kinds of news on a daily basis. So if you will keep on reacting on every news, then ultimately you will end up holding nothing in this market. And it is applicable at all times, at any given time. So this is what I think one has to understand. One has to evaluate oneself, whether I am in this market as an investor or I am in this market as a trader. So if you ask me that I am 100%, there is no doubt, I am here in this market for this trading and all. So for me, all these news, all these headlines, they don't matter at all. So for me, it is like something like a scoreboard. Or for me, again, it is like I'm a marathoner. So I'm running a, say, 42 kilometer of run. So for me, it does not matter that at 1 kilometer, where am I? After 5 kilometers, where am I? As long as I am running, as long as I am continuing my thing, I am okay with this. So that is why the biggest thing is to cut off all this noise.
But Vijay, you've always said that markets reward patience. It's difficult to be patient in this kind of a market. Na? Sunday ko kuch hota hai, Tuesday ko kuch aur ho jata hai.
So that is why it's difficult to make money also, Joe. So because you have to win over yourself. If you are not patient enough, then any given time you will be out of this market. So this is what you have to learn. All these are the quality of a good investors, that you need to keep knowledge, courage, and patience. And the patience is a very important thing to ultimately to win in this market. So if you don't have patience, that means you are out of the race. So enjoy.
So Sunday morning when we were chatting with you, you were singing Tu Hi Re from Bombay for the finance minister. After the STT hike, what song did you sing?
So she punished me for that, because why did you sing the song? So I got this punishment. वो बच्चों को punishment देते हैं ना क्लास में, चल खड़े हो जा, उठक बैठक कर. So I got the punishment. So that is all right. अभी
फिर क्या गाना याद आया आपको?
बड़े बेआबरू होकर तेरे कुचे से हम निकले.
गा के.
इसमें गाने का इसमें शायरी है ये तो बेचारे. नहीं वो फिर बताते.
Okay. So if I want to ask you, if markets were a WhatsApp group, everything happens on WhatsApp groups nowadays. What messages would Vijay Kedia mute immediately? कौन सी noise से सख्त परेशानी है जो investors को देखना ही नहीं चाहिए?
Oh, मेरे ख्याल से the biggest problem in this market is कि हाँ भाई वो जो micro level का जो news आता है ना, micro level का, कि हर चीज़ को connect कर देते हैं macro से, micro से macro से हर चीज़ को जो connect कर देते हैं, वो बेकार का वो noise है. और जो रेट का जो आदमी वो देने लग जाता है लेवल्स कि हाँ भी ये शेयर्स है, ये इसका ये हो जाएगा, इसका ये 5% बढ़ जाएगा. पीपल आर टॉकिंग इन परसेंटेज टर्म्स, यू नो. तो वो सबसे बड़ा नॉइज़ है, वो बेकार का है. तो उससे मैं दूर रहता हूँ इन सब चीज़ों से.
Right. So you've been, known for spotting very long-term stories and very early. What is your filter before seeking कि मैं कहाँ ढूंढूं, क्या सेक्टर ढूंढूं, क्या कंपनी और कैसा promoter?
So as I know that I simply apply one formula which the acronym is SMILE, SMILE. So S stands for small in size, and MI stands for medium in experience, and L stands for large in aspiration, and E stands for extra large market potential. So usually I like to invest in a company which is the smallest, or maybe the small company in its sector, not necessary. Obviously, I do invest in a small cap and mid caps only. So, but it has to be the small company in that sector. But management should be having a clean track record and should be having 15, 20 years of experience, so that they have seen all the ups and downs in this market, up and downs in the economy related to their companies, that they have gone through all those phases of life. And then L stands for large in aspiration. The management should be very ambitious. If they don't have the fire in the belly, then obviously 5,000 crore company cannot become 50,000 crore company. So that large in aspiration is very important. And besides all, very important is extra large market potential. So the market size of the company should be so big that the company always remains small. So that is what all these things put together, I identify company. And it's obviously bottoms up approach. So this is what I'm doing for myself, and luckily it has done reasonably well. So I don't want to change this.
But Vijay, it's a difficult task. Takes a lot of research. I'm sure you must be having some filters at your end. Company, yes. But how is it that you see ki, it has managed to tick all the boxes? There must be some screener, some filter. Earnings. what valuation is the stock available on?
So I have, earlier I have bought few companies. When I bought that time, they were actually, they were losing money, but they have cash in their books, like Tejas Network, just a reference for purpose we are talking about. So the market cap was around maybe say 400 crore or something and all, if I remember correctly, and they have some 200 crore in the books. And but the sector has completely changed. So as there is a quote of mine, which is like that, always remain invested in a, or invest in a sunrise sector at any cost, and stay out of a sunset industry at any cost, sunset sector at any cost. So I am always looking for the sector which is futuristic sectors. Maybe today the time has not come, or maybe it is at inflection points. Maybe after 3 months or after 6 months, if the overall sector will do well, then the company should have that balance sheet, that so it should be at that particular point. So this is what I have done in the past. So what I see that the health should be good. And another one more formula I'm applying in this market is this. I keep, if any, I will give you the reference of an athlete. Suppose if an athlete has created a track record, or suppose a marathon, he has done a marathon, he or she has done a marathon at particular time or whatever it is. But currently, the athlete is out of the form. So I put that athlete or put that story on my radar, and I wait for the time to turn around. So when that company is at the inflection point, then I just think that once if it has set a track record, maybe next time it will also do well. So I wait for that inflection point. Sometime I have to wait for 5 years also, 10 years also. So that is all right. That is my business. And when I find that now this company has completely turned around and sector is also growing, so then whatever money I have at that point of time, I invest in that company. So this is what I had been doing.
Patience and more patience.
Yeah, patience, yes.
Okay, since you did talk about Smile, and I want to talk about the small cap sector right now. You know, if you look at individual portfolios, they've been hard hit, especially small cap investors. Some people are not even opening their portfolio balance sheet right now to see. Stocks around 80, 100 odd %. You think 2026, that recovery will kick in with small caps?
No, I don't think. I personally, I feel that now things are going to, this 25, 26, similar to 25. 25 was, we made a lot of money between 21 and 24, let me tell you, right?
Everyone did.
Everyone. We means everyone. Of course, you also, including you. So, we, of course, yeah, we made a lot of money.
Mutual fund returns, yes, they were very good.
So, and the stocks multiplied 3 times, 4 times, 50 times, 20 times, 50 times, you know. Now we are paying the toll for that. We are paying the tax for that. Once you pay to income tax, madam, and then again you are paying to the market. So now 25 was the reality. You know, market showed us reality. कि बेटा तो खाली उड़ना नहीं जानता है, तेरे को आराम भी करने का, नीचे भी वापस तेरे को आने का. So this is what 25 showed us. 26, I think that is going to be a year of consolidation. But in my personal view, I think the market has met the bottom. If you, index-wise, if we say, or even smaller and mid-caps, they have been beaten down so badly. So I don't think, largely, I think market has met its bottom. And at the same time, I have this view that this market is not going to show new high also in a hurry. So this market should be in a consolidation phase. And second thing, I think, even in this kind of market, you will get ample of opportunity. Why I'm telling you? Because I remember in 2008, after this Lehman Brothers financial crisis happened, market were sideways between 2009 and 2040, index-wise. Index did not show new high, I think before 14 something, if I remember correctly. But during that time also, there were so many mid-caps. Even luckily, my 3 stocks went up 100 times. Between 2008 and after 2008 crisis, between 2009 and 2014, they went up by 100 times. So that gave me this, courage. And this is what the same formula I am applying now also. Ki maybe this index-wise, this market will consolidate, but you will certainly get some opportunities in this market, which is going to give you a very handsome return. But the idea is this, to identify the same stock at right time. That is what our homework should be of that level.
So basically you're saying wait for another COVID or 2008-like crisis.
No,
to get
crisis has
rich.
already come. No, this is the crisis only. No,
Okay.
crisis we have seen. You see, in 10 years only, you will see one crisis only. No, not. Don't expect this.
No, not at all. I don't want any crisis either.
Yeah, yeah. So that crisis we have seen. Now we are seeing the correction of that
exuberance
which happened between 2021 and 24. So maybe after 2000. In 26, you will find some level playing field kind of things will happen in this market. I don't think this market is going to crash further from here. This is what I feel as of now.
So where to hunt then? Where to hunt? Because there are a lot of pockets which are looking cheap, but there are lots which haven't fallen at all also.
So that is why I tell you, this is not an easy process. As I said, that you have to identify the right script, should be available at right price. So that is not an easy thing. That is an ongoing process. And world has become also dynamic. Like you were talking about this IT sectors and all. I was seeing that, if I remember correctly, in last 15 years, Wipro has not given you any kind of return. So this is was it happening to IT. Then, and it is having a large market share in our market cap. Infosys, all these IT companies are having a major share. So, and they are not performing that way. So this is, it's not a difficult, it's not a so easy thing, it's a difficult thing. But you have to, everything is difficult in life, you know. Yeah.
You make it easy with songs.
No, depend. Yeah, I'm trying to, because जो कुछ नहीं करते हैं वो फिर गाना ही गा लेते हैं और क्या करेंगे उनके पास में.
तो फिर गाने से start करते हैं. To current state में patience कैसे रखनी चाहिए? To describe your state of mind right now, what is that song?
नहीं, inactivity is also an activity. Not necessary that you have to, every day you have to, रेत से तेल नहीं निकालने का. कि अगर कुछ नहीं अगर आता है तो आराम को गाना गाओ मेरे साथ में बैठ के, भी क्या करने का अभी. तो हाँ, so that's what I'm saying. It's not necessary that every time you have to be active in this market. If you don't find any ideas, better protect your money. Don't lose this money on your every trade or every investment alone. You can have your money in the bank for the timing. Whenever you get right opportunity, that time you strike. It has to be like वो हिंदी में बोलते हैं ना बगुला के जैसे है. वो बगुला बैठा रहता है तालाब के अंदर में, और बगुला भगत बोलते हैं उसको इसीलिए क्योंकि वो भगत के जैसे चुपचाप बैठे रहता बिना हिले बिना. जो ही कोई मछली आती है उसको फट से पकड़ता है, खा जाता है और फिर चुपचाप भगत के जैसे ऐसे बैठा रहता है. तो वो बगुला भगत बनने का यहाँ पर इन्वेस्टर्स को, वो हर समय छलांग नहीं लगाने का कि हाँ भाई मैं हर समय कूद रहा हूँ, वो जरूरत नहीं है. यहाँ पे हाथ पैर टूट जाएगा तो फिर वो कोई भी काम के लायक नहीं रहोगे.
But you know, Vijay, it's easy for people like you who have seen 2 bear cycles and then massive bull markets as well. But for most of the investors who have come in at the COVID lows, they've not seen a bear market just yet. Very, very difficult for them to be patient in this market.
So this is a lesson for them. That is what I'm saying. Any school, any college, or any exam cannot, or any course cannot teach all these newcomers that how to behave in this market. So everybody has come and everybody wants to become a crorepati overnight. That is the real problem. So now this whatever is happening in 2025 and 26 or whatever is happening, it is actually it is going to teach them a very good lesson. This market always doesn't go one side. There has to be a correction and reaction and action. All these things happen as a part and parcel of this market. I think that would actually, that would build their character, that will build their personality to be in this market for next 20, 30 years. So I think this lesson was very important, which they are going to learn. If they learn from this lesson, then it is a good thing for them. And otherwise, jo phir hota hai, wo hai phir.
So what opportunities are smiling in this market right now?
You see, currently, I feel opportunities are not random. ऐसा कुछ नहीं है कि बहुत plenty, आपको बहुत सारा opportunity मिल रहा है. ऐसा मेरे को नहीं लगता है. Again, I think that one has to be very selective. So if you, let me tell you that, like, suppose if India has to become, say, $10 trillion economy by 2030, 32 or whatever it is, now 10% GDP growth we are projecting. So maybe in 7 years we will double. So maybe in 7-10 years we will $10-12 or whatever it is. So I think without, like, infrastructure, you cannot imagine a $10 trillion economy. So I think, and those shares also find sectors which has already, reacted. Their infrastructure stocks, as I said, it has already, they have already 2/3 of value has gone. Now they are available at a 1/3 or maybe 30-40% of their peak. So I think it could be a good opportunity in these sectors. Metals also, ultimately this metal, whatever happened in this metal, and now they are correcting. But I think maybe next 10 years should be good for this metal stocks also. So similarly, tourism also, government is also focusing on tourism. I think tourism is also a job creator. Tourism should also do well. So there are some pockets which are going to do well.
I understand infrastructure, but again, your way would not be via L&T, right? I'm sure there are small and mid-cap companies you're looking at. Any niche businesses within infra?
Yeah, of course, because I always invest in small companies, not L&T and all these things and all. So there are many companies you will find out which are doing something in water. We are doing something, some EPC into power and all, because as everybody is talking, without power now, again, you cannot imagine. Even China has actually, I read somewhere that China is advising USA to increase its power production. China is advising, don't teach us, you just increase your power, otherwise you're going to have a problem because of all this, whatever this AI, VI data center, all this demand is going to come, so huge demand is going to come. So they are teaching USA. So I think the same thing is applicable to us also. So any company which are catering to all this business of power and water and all, this infrastructure should be invested.
What else is looking good?
I think I like hospital business. I have invested in hospital company. I like hospital business because there is, in India, we have a young population also, and as well at the same time, don't ask the name. You are taking mic.
No.
Because, so India is now, it's a unique situation. We are a young country also, as well as we are an aging population also. So I think the demand for hospital is going to be there for next 10, 15 years. But stocks are very expensive. So when
I was basically lifting the mic to say that, that healthcare as a sector is priced to perfection and valuations have gone off.
So wait for, pray to God that suppose if something happens and all this, now they have reacted 20% from peak, 20, 30% they have reacted, come off from their peak, but still they are expensive. So you have to keep a watch. If a market reacts and if you get something cheaper, then you can invest. Otherwise, keep money in liquid fund.
But you know, Vijay, the problem is, and that's the same with the other sectors also that you said, tourism and hospitality. Definition of cheap is now very different than what it was 5 years back.
Yeah, so I will tell you that is the market is very unique. I will tell you another cheap sectors, but you are not going to invest in those companies like PSU banks and all. So I'm bullish on PSU banks, but nobody is going to invest. They are available at 5, 6, 7 PE, 12, 13% credit growth rate. Dividend yield also 3, 4%, but you won't like it because you want fun. You means people, like all these young people are coming to the market. They want fun, they want some excitement. So better to have a daru instead of investing in these cheap stocks. That will give you fun, that will give you excitement, that will give you hangover. So this is what I think.
Okay. So other than the sectors, the one call that you really got right, Vijay, and I still remember, what, 2 years back? China, your investment in China. Do you still have that? And are you still bullish on your China returns?
Yeah. So China, I'm a patriot, okay? China is close to my heart, let me tell you, business-wise, okay? So ni hao. So I know this much only in Chinese. So I'm a fan of China. From business perspective, let me tell you, I'm a really big fan of China. I think China is the first wonder of 21st century. What China has done, every country should learn from China, including India, including USA, including Korea, Taiwan, or whatever. So I have invested in ETF, which is listed at exchanges, and I'm still holding. Of course, I am holding. I don't want to increase more because already gone up by 50, 60, 70% from their low. So, but I am very, yes, I am upbeat on China. So,
आज China पे गाना हो जाए.
मेरा नाम चिंचिंचू, चिंचिंचू बाबा चिंचिंचू, रात चांदनी में और तू, hello mister, how do you do? सब चुपचाप बैठे हैं यहाँ पे, क्या बात है?
जब तक आप गाओगे ही नहीं, how will they join you?
मेरा नाम चिंचिंचू, चिंचिंचू बाबा चिंचिंचू, रात चांदनी में और तू, hello mister, how do you do?
Okay, on that note, Vijay Kedia, always a pleasure having you on the show. Keep smiling and may your portfolio always do.
इसके अलावा कोई दूसरा रास्ता भी नहीं है. रोने से कोई पैसा आपका पोर्टफोलियो में देने वाला भी नहीं है, तो बेटर है हंसते रहो।
Thank
नहीं,
you.
thank you, thank you, thank you.
Thank you so much, Mr. Kedia, for those words of wisdom. Lots of notes are taken, by the way, Sumit, from this conversation.
And for that lovely song at the end also. Round of applause as Aisha.
Mera
Yes.
naam Chin Chin Chu, of course. Aisha, thank you so much for handing over the token of appreciation to Mr. Kedia.
Gold. So, you know, Aisha, I don't know if Aisha was, but I was hoping that Sir would at least finally name a stock. But okay, he's named sectors, which is at least a very important
so
thing.
I've made notes. I've made notes. PSU
Go on.
bags, he's bullish on. Metal stocks, tourism
Healthcare.
stocks, healthcare stocks. So I've made a note of that. And the
पता करना
ways-
पड़ेगा कौन से हॉस्पिटल में सर ने पैसा डाला।
Absolutely, लेकिन कौन सी कंपनी में इन्वेस्ट करना है? Small company in the sector, good track record of the founders. 15 to 20 years of experience they must have, and must have seen the highs and lows of the market, of course, and large aspiration. Fire in the belly. Founders के belly में fire होना चाहिए. Fire in the belly बहुत ज़रूरी है.
Used to be like Anu Malik in what was that show? And you say, "Aag laga denge, aag laga de, aag laga de, aag." You need those kind of founders. Also, I really loved how he started the session where he said he's also in this for the marathon, and as a true marathoner who's done I don't know how many hundreds of marathons and ultras and all
31,
that.
31.
31, okay, but that's quite a lot for sure. So, ladies and gentlemen, very interesting, fun session, lot of key takeaways.
Yes.
You heard Shibani kind of make all the points that she shared here. If you have any of your thoughts, any points that you took away from here, please feel free to share them on social media. The hashtags are India Investment Summit and IIS 2026. Do tag ET now and we will definitely repost that.
Absolutely. Now moving on to our final panel discussion of the evening, the rise of domestic investment has been one of the most powerful drivers of India's growth story. Initiatives such as Make in India, Atmanirbhar Bharat, the PLI schemes and various financial incentives have encouraged Indian companies to expand capacity, strengthen manufacturing and invest for long term.
Exactly, and but at the same time, emerging sectors, semiconductors, renewable energy, electric mobility, advanced manufacturing and a couple of sectors that Mr. Kedia spoke about are set to attract significant investments in the years ahead, reinforcing India's role in global supply chains. Now, to explore how investors can ride the domestic investment wave, first up, I'd like to invite up on stage our moderator. It's Harsh Satya. He's editor research at ET Now Swadesh. And on Harsh's panel will be, let's hear from our panelists. We have Mr. Gautam Kalia, Chief Investment Solutions Officer, Mire Asset Sher Khan. Harsh, if we can have you take the center chair, please. Thank you. Mr. Mahmood Basha, he's the Head Retail and International Business, Baroda BNP Paribas Asset Management India Private Limited. Mr. Bhavin Shah, Director, Latin Manharlal, and Mr. Anshul Azare, MD and CEO, Yes Securities India Limited. Let's have that applause going, ladies and gentlemen. And over to you, Harsh.
Thanks, Sumit. Thank you, firstly, gentlemen, for doing this. And, the topic for the day, everyone, is riding the domestic investment wave. Now, we've seen record DII investments continue to come through, and we've seen FIIs pull out money again in record number. But it's really essentially why markets haven't cracked is because the DIs have supported the Indian markets. What has changed actually over the last 5 years? That's the first thing I want to most critically understand. And Anshul, let me come to you first with regard to this question, because it's more top down and you would have likely experienced this the best. Tell us, in terms of pure behavior, what has changed? In COVID, for example, there was one instance when someone came and told me that there will be real blood on the street if the SIPs were to stop. that never really happened. And since then, it's been a hockey stick kind of growth where SIP's numbers are concerned. And we see it month after month after month. What's driven that?
So I think very, very important to understand here is the behavioral change as we were you're talking. So when we see a surge in number of people opening Demat accounts and actually participating, it has been exponential. Like till 2020, when we say we had close to 3.5 to 4 crore Demat accounts, which now becoming almost 22, 23 crore in a matter of 5 years, tells us that the kind of confidence the retail investors or individual investors have shown in Indian equities is huge. And that is also visible in the SIP numbers, which is crossing 31,000 crore a month, which used to be around 10,000 crores way back 4 to 5 years. Now, when I look at from the behavior aspect, what I see is that let's look at our parents and what was their behavior when they started earning money or when they were earning. So I was just looking at that their behavior was like maybe SIP behavior, not investing into SIP, but save first, then think of either investments or purchases. So purchases, for making purchases, money was saved. For making investments, money was saved. So savings first and then comes investment and purchase. Now look at the behavior of new generation who is earning money. It is exactly opposite. The word doesn't sound great, PIS, but it's like purchase and investment, they are thinking first, and then whatever left is to be saved probably. So that's where we see that huge surge in investment portfolios, investment money and stable money coming into equities through SIP route. So earlier when we used to talk about that time to exit the market is when retail enters, an age-old saying. और retail अंदर आया तो हमको बाहर जाना चाहिए और retail बाहर निकला मतलब that's the time to enter. Now it has completely changed, and that's exactly what we have seen in the last 2 to 3 years, where FII's money is not there, DII's money is there. Markets have not shown any great returns in the last 18 months, but SIP flow, investors coming into the market has not stopped. So I think this behavior change is very, very important to understand, and which is driving these markets, and holding on to the levels today without any foreign money is the structural behavioral change in the retail Indian investor.
So Harsha, if you can add.
Yeah, I in fact was going to come straight to you, Basha, and my specific question to you is that, Mahmood, that when you're looking at the retail investor and when you look at history and investment cycles, they say history does not repeat, but it rhymes. And I want to take a leaf out of Anshul's answer and ask you a question to say that if history is going to rhyme at some point, is there a fundamental change with regard to retail investor behavior, or at the end of the day, the retail investor will still be the one holding, till markets fall? Will that be the case this time around? Will they sustainably, is there a change in behavior basically where the retail investor is concerned?
I think there is a fundamental change at a retail household level. We are finally from a country of savers is graduating to a country of investors, and multiple factors have contributed to it. If you look at the turn of this century, the real returns one would have got on a fixed income product was about 7-8%. So there is no incentive for any retail investor to take risk and invest in a capital market product. But over the last 2.5 decades, the real return on fixed income has come down to 2% or less than that. And then there is a taxation. So on a post-tax basis, there is no returns one can make investing into a fixed income product. I think that coupled with the fact that capital market over a period of this 20 years or so have delivered a decent post-tax returns, you have a POC. So earlier we used to say equities will help you create wealth, but now you have a POC of that okay, over last 20 years, there are 14% CAGRs is what you have got from broader indices. Actively managed funds would have given you a higher return. So there is through. Third leg is that the awareness level, combination of what asset management industry, the intermediaries part of it, and the media, all of it, what we have done, now reinforcing this message that yes, if you invest in a capital market product and stay invested for long term, you can make. And during this period, we have seen cycles. I think to come back to this, say that what we are seeing now is a structural shift where people are moving from guaranteed return products to capital market products. Ease of doing transactions is helping them to execute it faster. And we already have a POC of capital market doing well. So I think it's a structural change. If I've seen how investors have behaved in 2008 to 2010 GFC crisis, post-GFC crisis, and how did investors behave post-COVID, and how they're behaving now. Post-GFC crisis, investors went away from the market. They didn't want to stay invested. But there is a lot of maturity retail investors have shown post-COVID. They in fact came and invested more money. This is one of the prolonged period of time correction we are seeing, about 18 months, no returns from the broader indices. But we are seeing more and more investors coming in. I think it is a structural change, and there is definitely reason to believe that the behavior of investors is changing, and we are gradually becoming a country of investors from country of savers.
Okay. Bhavin, you know, Mahmood spoke about how returns have been strong, at least equity returns. You know, the other place where returns have been extremely strong is in gold and silver. And we'd be out of our jobs if this were to continue, right? Talk to us. Is it frenzy, or is it is this something that is sustainable? And how is the Indian investor reacting to this, in your opinion? You understand and you kind of explain and deal with clients in terms of asset allocation. Are more and more clients coming to you and asking you a question, hey, why didn't you tell me gold was a great investment a year and a half back?
Sure, I think that's been the most interesting, the topic for gold, silver, and I think in last few years, if you go to see, we barely talk and even discuss or think of allocation of gold and silver coming in especially, right? So I think with time, people have now been, of course, see, practically what happens then in the retail or investors, scenario or fraternity, you always look at things, what is there in the limelight, what is catching more attention in terms of returns. So it can be any instrument, but now, right now we are talking about gold and silver. So what is happening is, structurally, I think, I mean, everyone reads this in the news, and you know what comes in, that the anticipated higher demand for silver in the different spaces like EV and AI and data centers and all of that. And that followed the retail and the speculation, and you know how it is, right? I mean, the MCX and the lot sizes and speculation and all of that. So I think, but the way India right now is catching up or kind of leading towards the semiconductor space, the AI, data centers, all of these spaces, I think silver has definitely got a lot of industrial consumption, and hence, because of these upcoming industries taking place in India now, I think fundamentally also one should and can look at investing or having certain allocation as a part of principles and thumb rule of asset allocation, because of course all the asset classes don't perform at the same time. So what becomes very, very important is to have a well-balanced portfolio, making sure doing some kind of active management in terms of having the right assets in a right proportion. And I think when we have the views in specific to any instrument or any asset class, I think that time you can always rebalance your weightages. So I think gold and silver both has got a fundamental justification, and these corrections can be probably looked at, re-entering or probably redeploying if you have kind of done any kind of trades in the past. Because जब तक वो phase out नहीं होएगा, तब तक client पूछने ही वाला है आपको. That because if one has not invested, he would feel the fear of missing out, the left out, and he would want to invest. So they keep on asking, yeah, why did we exit? Acha, I missed out. Why, when is the right
Bhavin,
time?
this is a good time. This is a good time to deploy if you've missed the bus at, say, 4,000 on the ounce, $4,000 on the ounce when gold was.
One can look at start re-entering and accumulating, not going all out at the same time, but it could be an accumulation.
Okay. May I add to what is said? Uh, Gold has a role in anyone's portfolio because it has a negative correlation to both equity and fixed income over the last whatever number of period you see. However, it has very limited economic value. It has a place in one's portfolio, but it doesn't generate any income as an asset class. The returns in last 2 years, in my opinion, are not sustainable. So if one investing in gold as a part of a diversification, because it has a negative correlation, help you reduce the volatility, especially in times where you have uncertainty in the economy or there is a geopolitical event, gold is a good hedge. It does that work. But investing, looking at last 2 years return, I would recommend everyone that keep your return expectation at a lower level. There are tailwinds for the gold, and it may continue to deliver good returns, but moderate your return expectations.
Okay. Gautam, finally. Tell us, we've come out of a week where there has been a sea change with regard to Indian policy. One, you've got the budget which has come through. Nothing major in terms of the budget itself. You've also seen the India-EU FTA come through over the last couple of weeks, the India-US trade deal happening. What changes for you in terms of themes, top-down? And what could the next 5, 6, 10 year, maybe the next 10 years in terms of big themes look like, basis the kind of policies that have been laid out over the last 2 to 3 weeks?
I think everything's been very consistent. So if you look at this government and see what they've been talking about for the last 5, 6 years, you're seeing those things play out now. And they've only been consistent in their policy and approach. So obviously with the trade negotiations and the trade deals coming in, you'll see, a lot of impetus to the exporters as well as consumption growing. That is one part of the piece. But on the other side, if you look at what they did with the budget, last year budget, you had a lot of SOPs for the short term, right? But you see this budget, it's all about the long term. It's all about the China Plus One. It's all about building AI capabilities, the EMS space. So it's all about investing in the future and making sure that India is ready to capitalize on that, right? While you can see the news of Anthropic coming in and the IT sector, responding to that. So the government is already anticipating that, there'll be sectors and spaces that we need to take a significant leap in rather than, be another follower. So that's what I'm seeing that the government respond to and work on. Obviously, with the emphasis on manufacturing, infrastructure, and the SME space that they've put in, the investor feels that the government could have done a little bit more on the budget, because short term, everyone is looking for that quick return or some relief.
But enough to kind of build a capex cycle from here, Gautam, you reckon?
No, much more will need to be done. But the point is that they've got their fiscal deficit also. That's something that they are being able to put in control and keep the same target of 4.2%. So they are being able to manage that and yet put in that push wherever is required to kind of ensure that the capex cycle continues. But that is something that is ongoing, and that's why they introduced the REITs part also for the CPSCs. So from a retail investor perspective, I think the sideways market is something that they'll have to contend with, right? 2008 to 2014 is one such example that comes to mind, where I'm talking to clients who've invested and they are sitting on 4% returns absolute for 5, 6 years, right? And they're saying, okay, you guys have been telling me about long term. I've invested for 5 years. How much more long term? What do you mean by long term, right? And if you just see point-to-point returns right now, the large and mid-cap space is about 10% plus, but small cap is showing some weakness. It's mildly negative. But as point-to-point performance starts reducing, deteriorating over longer period of times, that's when we'll really see the impact of whether the evangelization of long-term investments, the knowledge that comes with staying invested, you know, all the finfluencers, all that Fintech that has done to, let's say, increase financialization of savings, will that actually play out in terms of investor behavior? And I think if you were to break down investor behavior into 3-4 stages, I'm seeing the second stage of investor behavior where now what they're doing is they're saying, okay, the fund is bad, let me change my fund, right? Then they'll move on to my advisor is bad, let me change my advisor. And then they'll finally move on to, okay, this asset class sucks, let me, you know, just stick to the gold or the silver or debt.
I can already see Mahmood itching. You want to go for this one?
I agree with what Gautam is saying, that there is this tendency to shift from one to another. But I think among the investors, what I am seeing is that there are investors who are seeing the cycle for the first time, and there are investors who have seen this cycle over a period of time multiple times, and there is some subtle distinction between how they are behaving.
But the new investors are surely in, at least 50% of investors are new investors.
Yes. So they are the one, I want to believe, are the one who will be switching from one asset class to another asset class because they have not seen the cycle. But those investors who have seen the cycle multiple times over last 15, 20 years, I'm seeing a lot more mature behavior, response from their, how markets are behaving. So I think even this new set of investors, if they go through this cycle once, will be behaving the way those who have seen the cycles in the past.
Sure. Anshul, has the cycle turned? Have we been here for the last 15 months in terms of the levels at which we've been? Can we turn from here? Do you see that? Do you see the budget? Do you see all of the developments over the last couple of weeks aiding to that turn? Because we saw that initially. We saw a little bit of optimism on Tuesday and Wednesday, and then Thursday again we were subdued.
Absolutely, we are heading for a turn. There is no second doubt about it. As long as your investable surplus is there to be invested in markets, they are there. What we have discounted in these 1.5 to 2 years also is the money has come to the capital market, but through IPO route. You know, we have around 1.8 lakh crores both the years, this calendar year and the previous calendar year. It is, that money is also in some or the other form has entered the market. Now it's a matter of time that when that money also starts moving around. You know, so from that perspective, if you look at it, even with those kinds of dull investments from FIIs and all that, and rupee devaluation, you still have not gone down. You know, so if this just need a bit of a spark, which will further start the ball rolling, and I'm very, very confident that we are on a cusp of a situation where we should not hold on our investments, continue our investments, rather the SIP is the best way to invest. I'll rather say gold and silver should continue invest in these metals as well, because silver has a very different usage on the industrial side, and there has been a continuous demand for that physical metal in terms of industrial usage as compared to gold. Gold, India has a different way to deal with gold. So we have much 3 to 4 times more gold than what the coffers in US have in our households. So it's more than $2.3, $2.4 trillion of gold we have in the household. So that will continue holding up. But silver, I'll say, is still a metal to watch because its usage in the industrial products and the domestic products, like आप लोग अपने घर में सब इलेक्ट्रॉनिक सर्किट्स वगैरह खोलेंगे ना, तो 200-300 ग्राम सिल्वर तो निकल ही आएगा उसमें. You know, so that is the usage of silver which is driving it, and it will continue driving it. And equity markets are definitely going to be the great ones in the coming 2 to 3 years.
But you're not encouraged to do that at home. You'll start to see people actually do that. So
27% of the silver is recycled silver, ना? तो आप जो इलेक्ट्रॉनिक वेस्ट बेचते हो उसमें से सिल्वर ही रिट्रैक्ट होता है.
Okay, Bhavin, let me come to you. So Anshul, let me take a cue from what Anshul said. Invest in everything right now. Equities is going to go up, gold, silver, all good. How do you allocate? I have very limited corpus. So tell me, how should I allocate my corpus?
So see, basically, a very, very well-balanced allocation is required, and I feel that normally what happens that, like he also mentioned that, looking, the time actually when the COVID times, we had lot of, new entrants with the demat accounts and mutual fund SIP inflows and all that. And we were post that the one uptick constantly going up, we were all fearing that, with all these young and the, certain age group who has entered now, has only seen one side of the coin. And when the other side turns, I don't know, really what's going to happen. So I think what it eventually leads to is that don't get exposed to only one single asset class just because it's going up. And that is what end of the day attracts you at all the times, right? I mean, maybe any commodities or maybe equities or maybe anything. So I think if you start structuring, having a basic thumb rule of not putting everything into one asset class is always going to, safeguard you, because like I mentioned, everything.
But Bhavin, give me the allocation.
So, allocation in percentages is always a little case-to-case basis.
Of course.
But on an average, if you take any mid-age group, I think if you have little bit of longer-term horizon, I think 40–50% should be equities. Otherwise, we will not see any wealth creation in the longer run happening. And then it can be as per what suits you. Maybe 5–10, 5–7%, 4–5% of depending on gold, silver, where they stand. Maybe either it can be in an accumulation way or in any form. And then you have little bit of debt. REITs and a lot of ETFs have come in the play. I think we are still running short of options for ETFs, because beyond gold and silver, people are talking that I want to invest in copper now. Copper is the next gold, right? So unfortunately, you don't have independent funds or ETFs where, one can even start, as a retail or HNI start participating. But then what it comes to that, which is in direct correlation as a stock that is available to, because I don't want to miss out on that rally, right? So then you kind of turn around and get to the advisor ki, yaar, copper mein kaise bhi invest karna hai, how to go about. So I think having a well-balanced that, about 5–10% of debt, 4–5%, 7% of gold, silver, or any other commodity that you feel that has got a good prospect. And then you have a lot of other instruments like REITs, InvITs, and ETFs. So I think that is broadly how you can structure, and you keep reallocating, because what becomes very, very important is active management and rebalancing your portfolios with time to time, because every small event is going to affect your portfolio in some or the other way. So like how doctors say by regular health medical checkup karna chahiye, वैसे you have to keep that practice in your portfolios also, because it's become very, very dynamic.
Absolutely. Absolutely. So point taken. Gautam, let me come to you. And, let me come to the point that we spoke of a few minutes ago, where you said that in terms of policy, there is a lot that ought to be done. What's missing? What's that missing ingredient, according to you? And what will create the animal spirits at this point?
So, one thing that I don't know to what extent can they fix this from a policy perspective is because, you can control inflation, you can control through monetary policy, you can control rates, and you can manage the savings and investments piece. But currency is something that we've seen, we need much more stability on the currency side. And a 2–3% depreciation year on year is something that the markets can account for and deal with. But if there is a significant correction, erosion, then what happens is for FIIs, it becomes a bit of a challenge to kind of project returns, and then they have to look at the emerging market basket and have a relative weight for India. So I think currency stability is something that from a policy or from a on a day-to-day action perspective from the RBI side, something that needs to be put more emphasis on. So if that is being able to manage, I think you'll start seeing more significant FII flows coming in.
Okay, I'm actually way up in terms of time. Shubhani is standing there. Thank you so much for bearing with me. But over to you guys, Shubhani, Sumit.
Well. But what an insightful discussion. Again, I was taking notes on this one, and thank you so much, gentlemen.
It's a huge round of applause, ladies and gentlemen. Some great ideas that have come out here. Harsh, we request you to please present a token of our appreciation to all the 4 panelists. While Shibani, please tell us what are the notes that you have taken before we hear from...
Lots of notes taken today, and one of the key takeaways, of course, has been how your strategy when it comes to investment has to be multi.
Yeah.
So, and keep on, you know, whenever you keep on doing regular health checkups, similar to that, you need to keep on going back to where all you've invested.
I remember this what you said about how it's got to be multi. I remember there was a mutual fund and their ad was beautiful. They said, "Suno sabki, karo multi." Karo multi.
Absolutely. Well, that's a photo op right there, and a huge round of applause. Show some energy. We are getting food and drinks now after this. This is the final session for the day. So,
as we close today's summit, like you said, you know, one message does come out loud and clear that India's growth story is resilient, reform-driven, and full of opportunity.
absolutely. From policy and markets to manufacturing and new age investment, the conversations today have reinforced the confidence in India's long-term potential.
And I hope our audience, you've taken back food for thought, but now you will be getting some food for your stomach. But before that, a quick thank you to our partners, presenting partner SBI, co-powered by Adani, Ambuja Cement and HDFC Life, associate partner Latin Manharlal, crypto partner CoinDCX, housing finance partner LIC HFL, timekeeping partner Just in Time, healthcare partner Zota Healthcare Limited. And on behalf of etnow.in, thank you so much, ladies and gentlemen, for being here, and we hope you have a good rest of the evening.
Absolutely, and please do join us for some drinks and dinner. The drinks and dinner are now open.
Thank you.
Thank you.